Good morning, everybody. Happy Monday. Hopefully, everybody had a good July 4th weekend. How's everybody doing today? Thank you, everybody, for being here. Parzival was first. How are you, Parzival? Rusty, what's going on in the streets is here. Chels is here. Step Bully 10,000 steps. Louis is here. Kevin. Thank you so much, everybody. Really appreciate it. Lots happening right now. A lot of deals. Michelle, it's a little early for you to be up, isn't it, Michelle? Where's Ray at? It is 8:47, Monday, July 6th. And you know what? We are live. So, with that being said, please do me a favor and read the disclaimer that is coming on the screen. I am not a financial advisor. I am not your financial advisor. Please remember, this is for entertainment and educational purposes only. And with that being said, let's get into it. Lot to start with. Markets are looking good, but so many deals, so many things happening. The highlights right now, and I don't even know where to start. The highlights are SK Hynix. Their mega listing is going live this week. We have Micron and Qualcomm getting research, getting price targets lifted by Citi. We got Broadcom landing an Apple deal for multi-generational ASIC chips. Micron and Ford signing a long-term supply deal. NVIDIA delaying Kyber. TeraWulf and Anthropic sign a deal. Citi gives us their H2 playbook. We got the macro. And then we got the next CPI print in 7 days and 23 hours from now. Crazy. So let's look at what's happening in the pre-market before we start getting into news. Gerstner is still talking, and I do support everything Gerstner's done. I've said similar things on X previously. My only critique, I hate that it's called Trump accounts. The reason why I hate it being called Trump accounts is I think it will deter CEOs and founders that don't support his political beliefs from donating to them. And I think that's the wrong look. If I could have done it, it would have been American accounts. I think it should have been neutral. My own opinion. Tommy Dimes is here. Mr. Dimes, how are you? All right, so we got Iren, 7.76%, 41.83. We got SanDisk up 5%. Marvell, 4.25%. Tommy Dimes needs next at $5, ladies and gentlemen. Next at $5. Broadcom, $375. Big deal with Apple. We will get into that. Nokia, a lot of you talk about it, $12.49. Micron, holding down the $1,000 level. CoreWeave, $84.12. I am a buyer this morning when the market opens. Oracle, $144. I could be interested and enticed to buy more. I like Oracle a lot here. Qualcomm, under 180, little wild. Matt Money wants next to go to $1 so he can buy a 10% stake in the company, get on the board of directors. Meta, trying to climb back to 600. Reddit is holding strong at 196. SpaceX at 163. Rocket Money at 101.28. Amazon at 244. We got Cisco at 112. We have NVIDIA 195. Listen, NVIDIA being 195 here after this news, I'll take that any day of the week. Alphabet 360, TKO Group. It may be evening out. We'll see what happens. SoFi is not being so fly this morning, 1822. You got Apple at 307.89. We have Uber at 74.25. Zeta's trying to hold 20. Oh, looky, lucky, lucky. Oil is at 68.31. How about them apples? How about them apples? Coca-Cola, 83.56, the best cola out there, my opinion. Microsoft, Mr. Softy, under 390 right now, 387. Netflix is under 77. Palantir losing a little bit of momentum, 128. CrowdStrike, 191. Salesforce, 164. Service now 104. Ethereum 1741. Bitcoin taking Sailor down with it, 61,758, down over 2%. Strategy down over 3%. Crypto getting hammered. Crypto is getting hammered, ladies and gentlemen. All right. Let's start and let's get into some of this news. Let's get into some of the news. Let's start with the chip complex. Let's start there. So we had a Citi analyst, or I should say team of analysts. So Citi put a catalyst watch on Micron and Qualcomm pair. And the setup captures the entire memory versus handset divide we're living in right now. Micron is the momentum name. Citi lifted its target to 840 back in May on a 40% DRAM price hike. The street consensus is strong buy, and the company just posted free cash flow of about $18 billion. The bull case is pretty simple. High bandwidth memory, HBM, and DRAM pricing staying tight all through 2027. Qualcomm is the pressured one. It's been dropped from several Russell growth indexes. Handset and PC demand are soft, and the Apple modem transition still hangs over the story. Qualcomm has badly lagged its semiconductor peers this year. Citi hasn't led with the exact upside and downside price targets, but the framing could not be clearer. Memory up, mobile under pressure. So we'll see. I think Qualcomm's undervalued. I think Qualcomm is the cheapest in the semis. We'll see what happens. Broadcom, they're landing Apple, ladies and gentlemen. This is a huge deal. Shares are up a lot. Broadcom is trading higher after landing a 5-year deal with Apple to supply custom ASIC chips. This is the real validation stamp because Apple just doesn't, keep in mind, Apple was an Intel customer for a very long time. Apple left Intel to design its own chips. And then they kept, I have a 50% chance of getting this right. They kept NVIDIA for the GPU, and then they switched to AMD before doing it on their own, or vice versa. But they went with both companies prior to making their own GPU chips on their silicon. The fact that Apple is embracing Broadcom here is incredibly huge. Now, Broadcom already owns more than 80% of the custom AI ASIC market, and they're already carrying a $73 billion backlog on AI. Hock Tan is guided to more than $100 billion in AI chip revenue by 2027. Their most recent quarter alone did $8.4 billion in AI semiconductor revenue, which was up 106% year over year. Let's look at where Broadcom's trading at right now. Let's go to the big chart. AVGO. Broadcom. Getting a little bumpy bump today. Getting a little bumpy bump, and for good reason. For a good reason. So Apple is now joining. Check this list out. Alphabet, Meta, OpenAI as marquee ASIC customers. Google is already locked in through 2031. 5-year commitments like this are exactly how Broadcom turns that backlog into visibility, running all the way through the end of this decade. And I'll say this, for the AI trade debate, this is the counter to the bubble crowd. The hyperscalers and now Apple, who's been on the sidelines, they keep signing multi-year custom chip deals. And that's structural demand, not a one-quarter pop. Remember, Broadcom is one of the names that I'm already long on, but you know what? This is important. Apple is validation that everybody else is not crazy, that this is the future. They really are. They really are. So what do all you think? Let's get a poll going. YouTube. Let me get into the chat on YouTube and let's get a poll going. Let's see if you think this is important for the AI trade. Now that Apple is stepping in, the 800-pound gorilla in the room. All right. Start a poll. Is Apple partnering with Broadcom? How do we word this? Is Apple partnering with Broadcom? How do I want to word this? Is Apple partnering with Broadcom, signaling that the CapEx or the AI story is still in the early stages? Yes, no poll coming out. Please vote. All right. So we'll see how that goes. And the memory read through this week is going to be interesting because the biggest single tell for the whole trade drops tomorrow. Samsung reports preliminary Q2 results on Tuesday. And the street is looking, the numbers are crazy. An 18-fold jump in profit year over year off the memory boom. That's the number that everybody needs to watch for. The entire high bandwidth memory and DRAM complex. We're going to see what happens. Lena is in the chat. And you know what? I'm sure Cactus Jack is in there. This guy is a machine. I swear. This guy, if you're not following Cactus Jack on WhatsApp, you should be following. You should be on his channel. It is simply incredible. Simply incredible how quickly he gets the news out there. Incredible. Now, over the weekends, we had Foxconn posting stronger than expected quarterly sales, which is one more sign that AI hardware demand is not cooling off. Is not cooling off. When I put the whole thing together, SK Hynix is raising $29 billion. Samsung is about to show an 18x profit jump. Broadcom signing up Apple, and Micron riding record pricing. The AI infrastructure demand signal is about as loud as it gets right now, even with the stocks themselves going back and forth. Now, for all the Micron haters, out there, they're about to hate Micron a lot more. Micron and Ford. Now, Ford is not your typical technology company. Ford is not your typical technology company, but they are an avid user of chips because you know what? These are all in their cars, all throughout the cars. And what did they do? They signed a 5-year, I'm going to say it again, 5-year long-term strategic customer agreement that locked in supply for their automotive memory. So the agreement is strengthening the supply of automotive memory and storage solutions, and Micron is expanding production capacity for its key automotive memory products. The capacity investments are specifically designed to support long product life cycles and production continuity. We're going to, I'm going to cut over real quick because it looks like they may actually be talking about something that I want to hear them talk about. So hold on. Yeah, they are. So we're going to get into the NVIDIA stuff. Also, I'm going to come back to the Broadcom stuff. I'm going to come back to the Micron stuff with Ford. Let's see what our wonderful friends at CNBC have to say on the matter.
We have the best stuff, I think, in CNBC. But I know that the other stocks are all going to come back, particularly Broadcom, because it has a contract with Apple that is larger than we thought. David, you know that tech remains the battleground. Michael Wilson this morning says you should go back into the hyperscalers, which have not done that well. That smoothed Amazon. But I could argue that maybe we're looking too much at tech. Maybe we have to start looking at other areas of the market that are not as, let's say, competitive against each other.
Yeah, you've been talking a bit about that hope for sort of that broadening that we talked about. That has taken place to some extent, or at least is part of the market commentary these days. But back to the big, most important trade over the last, well, it's been years now.
Sure.
You know, you guys were here obviously on Thursday. I was not, but Meta and that news that came out the day prior. And the reaction to it as you read what Wilson had to say sort of about that broadening. I mean, where are we, Jim, on the whole idea of Meta and whether somehow their decision to lease compute capacity is a sign that their own CapEx is going to slow? That narrative seems to have stopped, but it took hold for a day or two.
Yes,
didn't
I think it stopped because there's the possibility of so many companies needing that compute, so that it turns out to be more of a positive. That's where I was when I talked about it on Wednesday, because the company has said, look, we need all the compute we can get, and we've already got a lot of interest from other companies. And, you know, Carl, this whole notion, Brad Gerstner talks about it, of compute. Anybody who has it is still a winner, which is surprising. Because at a certain point, shouldn't we see some profits in compute for somebody other than the much-loved Anthropic, which is who the partner is with Information, which says that they're going to go in and buy chips without ever saying what kind of chips? I mean, it's kind of the thing. I remember when I helped run the street.com, and I used to say, listen, here's what I don't want. I don't want any Friday afternoon stories that blast companies, because they will obviously look like that they are aided by short sellers. Even if they're not.
Right. Well, we're keeping our eye on the NeoCloud names. I mean, I think a third of CoreWeave's backlog is Meta, and even more so for Nebius.
People are killing CoreWeave on that, and I would say that CoreWeave actually is a winner again. The biggest worry that I have is, are there going to be areas, parts of the country, that are going to fight the data center bill? And that is the real risk, the existential risk that we won't be able to do it because so many parts of the country just don't want these.
there are parts of the country that don't want them, without a doubt. There's a story today about Blackstone's QTS giving up in an area of Virginia. That was a long fight. It's not necessarily reflective overall of what's going on. It's in different parts of the country, there are different approaches.
Well, Texas
we know
said
that.
Welcome aboard.
Texas has said that, but again, Michigan has said that to a certain extent. So you can't just have it a broad brush, say it's also purely right-left or things like that, or blue-red. It is interesting to note the Journal taking note of something we have known for quite some time, which is the articulation around AI and loss of jobs by its leaders, so to speak, has changed dramatically.
And
by the way, much of what the Journal cites was from interviews on our air.
Yes.
Whether it's Bezos or Altman or Jassy.
They were all ours. Didn't that seem interesting?
All right. How do I feel about this? I think that Kramer's right. I think CoreWeave is a winner. I think Meta's a winner. I think a lot of things are going to win. But we have new news from Cactus Jack. I would have never found this. This guy's amazing. SK Hynix plans to offer 177.9 million ADSs in the U.S. IPO. Valuation exceeding $1 trillion. Each ADS represents 1/10 of a common share. Common shares trade on the KRX Kospi market under code 000660, equivalent to approximately 1,581 per common share. So the ADS will trade at 158.14. Let's see. IPO price to be determined through negotiation between the company and the underwriters. I do not think I'm going to buy it. I got to go through the numbers, but I'm just not interested. I'd rather own Micron at this point. It may do very well. I'm just not interested in it. Oh, look at this. Jason, Bank of America maintaining a buy on Corning, raising price target to 243 from 223, 22% upside from the current price. Key drivers, optical segment expected to benefit from AI infrastructure buildouts. Bank of America highlighted progress in glass substrate technology for advanced semiconductor packaging. Long-term opportunities in optical and new market applications support higher estimates. Look at that. GLW glowing it up for the win. Glowing it up. Gotta like it. The one thing that they are right about, it will be intriguing to see what happens with standing up data centers over the next year or two. I don't know if we're going to get more and more fight out of it. I just don't know. I know I wouldn't want a data center in my backyard, but who knows? Data centers are the new manufacturing plants. New power companies. And I do believe Meta is underrated, everybody. Look, when we think about what this means, I think Meta has been taken to the woodshed for far too long. I think that the street is wrong on what they're doing to this share price. And it's hard to believe that they're selling off a company that continues to expand. I mean, Meta's still down almost. It's almost still in a bear. It probably still is in a bear market, actually, peak to trough. But over the past year, it's down 18.86%. And you look at the revenue, I mean, the revenue is CAGR to 24.7%. I just don't know how people can really say that Meta is lost its way. I don't see that anywhere in the numbers. I mean, this is a company that is expanding their cash from operations by a ridiculous amount. Their cash from operations over the past 9 years has grown over 600%. It's CAGR'd at 24.5%. Like, this is a company, not only is it trading at a low valuation, the amount of cash it generates is insane. And yes, they spent a lot of money on the metaverse that hasn't translated into anything, but they had the cash to do it. Everybody makes mistakes. Meta is more a perception of Zuck than trading on the numbers. That's all there is to it. And what I think is interesting, if we were to pull up all the semis, so let's do NVIDIA, cash from ops. That's insane. How crazy is that? NVIDIA's cash from operations is absolutely crazy. AMD, Micron, Broadcom. Who else are we adding in here? Who else are we adding in here? There's just so much capital being made and so much capital being spent. I don't think that this trade goes away at all. The money's rolling into them. You look at Qualcomm, throw Qualcomm in there. There's just so much capital. When I look at this, the AI trade does not worry me at all. At all. Yeah, we can look at CapEx. The CapEx being spent is absolutely crazy. We can look at that on a quarterly basis. Google. Mr. Softy, Amazon, and Meta. So the big four spent $358 billion in 2025. I mean, it's grown by more than 10x over the past 9 years. Year over year, calendar year 24 to 25 was a 64.5% increase. These four companies are expected to spend over $700 billion this year. This is not slowing down. This is not slowing down at all. I don't think that we have, look, long term, I think it's fine. Short term, we're going to find out. But Q2 earnings are starting in 2 weeks. Not this week, but next week. You got JP Morgan coming out and the rest of finance. So we're going to see what happens. Iran 41.43. Chips are moving. I think AMD and Marvell like the deal out of Broadcom and Apple. I think they all should. Micron's trying to hold the 1,000 mark. CoreWeave is retracing a little bit, 83.64. We'll see what happens. SpaceX, not really doing much. Man, Nebius is down quite a bit. Meta's still under 600. Qualcomm, 178. Pretty wild. It's pretty wild that Qualcomm is that low. They do so much profitability. Oh, my God. Reddit's moving a little bit. Rocket Lab's still over 100. Alphabet 360. NVIDIA 194.96. Got to get to the NVIDIA news. SoFi is not being SoFly right now, 1824. Absolutely crazy. TKO 194, Uber 74. Palantir selling off a little bit. We have a conference today where Zeta is presenting. I cannot wait to see what they announce. I think it's going to be very bullish. Zeta is that dark horse for me. SaaS is starting to sell off a lot, and crypto continues to fall. Strategy was over 100 last night. It's down to 96. Absolutely wild. All right, so let's get into some of the next news. Here's the big one. And it'll be interesting to see what Captain Sleepy Time has to say about it. I will call him later. He's probably still in bed trying to get his sleep score. He's trying to sleep max right now. Man, I should trademark sleep max. That'd be hilarious. NVIDIA Kyber delay. And the scale-up window for them is giving it AMD an opportunity. So Lena's going to want to hear this. So this is the big one for NVIDIA's roadmap, and it came from SemiAnalysis. NVIDIA supposedly is delaying Kyber NVL 144 rack architecture by more than 12 months, all the way out to 2028. And at the same time, it is supposedly, am I trademark maxing? No, I only applied for one trademark. I may have to apply for a couple more. So at the same time, it's canceling the NVL 72X2 alternative. So let's start with the Kyber delay. The headline is the delay itself because Kyber slips more than 12 months out to 2028. And the timing could be considered awkward since it's 3 months after Jensen demoed it on stage at GTC. The core problem is the manufacturability. The PCB midplane is proving really challenging to actually build. And the root cause that SemiAnalysis pointed to is the co-packaged optics or CPO. And those same CPO challenges mean the bigger NVL 576 design, the one that connects 8 Orbion racks over co-packaged optics between the NV switches, is also likely delayed or restricted to very small volumes. The NVL 72X, I got to do something. Hold on. Let's see. You know, I don't ban many people. I've banned, I think, one person. One person. I'm about to ban a second person. How do I do this? Why can I only put somebody in timeout? Why can't I ban somebody? I wonder why that is. How come I cannot ban somebody? All right, I will figure that out later. All right, I'll do it later. I see what you're saying, but I'll do it later. All right, anyway. The scale up gap for Rubin Ultra, and this is where it gets competitively awkward for NVIDIA and could be an opportunity for AMD, because the CPO NVS switch that NVIDIA needs isn't available until the Feynman generation, which is further out. So right now, NVIDIA has no proven solution to expand the scale-up world size for Rubin Ultra. So that leaves a gap. And its gap is the competition hack from AMD. They can get in now. Whether that's AMD with the MI500X or even Alphabet with the TPU Broadfly. So in the meantime, what SemiAnalysis said, and I read it last night, was that NVIDIA's plans to sell significantly more Oberon Rubin racks and Oberon Rubin Ultra racks to make up for the shortfall. So you may be asking why it matters. The delays and cancellations open a rare scale-up architecture window. AMD and Google through the TPU line now have a genuine shot at closing the gap with NVIDIA's Rubin Ultra platform before NVIDIA's CPO-based Feynman generation finally shows up for deployment. So for a company that almost never gives its rivals an opening, this is something that I am looking at. So when I think about this, it makes me wonder, why would Jensen go on stage at GTC, show this off as if this was a done deal without securing all the components he needs through deals? It does not make sense at all. And you know what? AMD could capitalize. Lisa Su is an incredible CEO. AMD is an incredible company. And this may give them an opportunity to really catch back up. We'll see. We will see. Means the supply. I don't think it means the supply chain is cooked, but it is interesting to say at the very least that Jensen would come on and oh, that's funny. So for all of you that it makes no sense, I agree with you. It makes no sense. Why would Jensen come on GTC on the global stage and introduce all the new stuff if you're going to have to delay it? It doesn't make sense. They've never done this before. All right. First, Amit is on vacation. He's on a plane. I talked to him 2 days ago. No, I talked to him yesterday morning. He is back tomorrow. He is still doing YouTube. He did a Singapore meetup and took a vacation. He's got family over there. So he will be back with all of you tomorrow. And I am not 59. I'm actually a millennial. Believe it or not, I couldn't believe it. I've never looked at that stuff, so couldn't tell you. Anyway, before the market gets open, I want to announce something that I announced last night on the members only stream. I built my own website. Right now it is free, nowflation.com. It is an economic website, and I built it how I want to look at economic data. So you can use it whenever you want. I have everything in one place. And we're going to go to CNBC in a moment for the bell opening. President of the United States will be ringing it. So I have my Nowflation gauge, which is where the engine that I built believes inflation actually is. The official CPI, where everything is. You can click into the different baskets. This is all current data. I'm pulling data in from a lot of different APIs. We got Shelter. We got the entire quilt of everything. Your gas everywhere from AAA. If we go to the top, you got everything you could want, from groceries, milk, $4.22 a gallon. If anybody wants to know the price of milk, how the prices are moving, this is all real data. Everything here is real data. None of it's my data. The only thing that is mine is the engine that was built for projecting where we actually are in the cycle. Everything else is all APIs from the government for everything. I even put in for everybody a mortgage tracker to show where the mortgages are. We're at 6.47% on a 30-year. Got Freddie. We got everything. Now, if you have ideas, let me know. I even put, you ready for this? Thank you to Chris Patel. He was like, you should put a switch to light mode. So we did that. We got a switch for light mode. So you can go light mode if you want. I like dark mode, but if you want to go light mode, you can. Money supply and liquidity from the St. Louis Fed. Got everything in here. So you are able to use this for free right now. This is step one in what I will be creating. I am waiting for a few things to, how do I pin this? I want to pin that comment. Hold on. So I got a few things that I want to build, and that's one of them. I will be building out a financial system. I haven't gotten all the pieces together for it, but I'll roll everything into one at some point. So have fun. If you like looking at things in the economy, have fun with that. I think you'll find it helpful. You're not going to have to go to multiple sites. I put everything I could think of, everything I want to see, all on the same site. So have fun with it. And we got a minute and a half. We have a minute and a half until the bell and until we get this party started. All right, let's cut over to CNBC, ladies and gentlemen.
Of the Trump accounts that took place over the weekend, Jim, this is an historic moment.
Yes, it is. Now, I do hope we get some clarity when we speak to Vlad Tenev. We have Brad Gerstner on this morning talking about, okay, well, this is, maybe we have some insight here.
72 exchanges. First time you've ever come together like this. This is going to be very interesting. What do we do it every day? Bring people together. That's what I'm known for. Bringing people together. So anyway, that's great. Nice to have you both. Thank you, everybody. So let's see. The status is we have the press. They don't want to know anything about soccer/football. Fortunately, they won't be asking any questions on that. Nobody cares about that, right? This is about the Trump accounts, which are absolutely incredible for children. Children can, at the age of 18 and after, become very wealthy people, come into the world with essentially no money, and end up at a pretty young age being very rich. And that's something that we've wanted to do, this country's wanted to do for 25 years. Michael and Susan, you've been so great. My Gerstner man has been so fantastic. You pushed everybody. It was so good. And I just want to thank everybody. It's a great honor. We'll have a little fun. And we want to be exactly on time. Are we allowed to be 15, 20, 30 seconds late? Look at that. Typically, no good, Jeff, right? And I'm going to ring that bell. And does it stay in the White House? Because I'm not giving it back. We're going to put that in the middle of the new ballroom. I'm not going to give that bell back. It looks to me like it's going to stay.
It's staying here.
Well, we'll watch the clock.
Thank you, Mr. President.
Great show.
I would like to ring my bell. Trump takes
Looking around the
forever
room
to
there,
do
you see
everything.
Michael Dell shaking hands with the president. There's Brad Gerstner, fresh off a squawk a few moments ago. Senator Cruz, Secretary Besson, Chair Atkins. Also from the NASDAQ, Adina Friedman, Chair and CEO, and Nelson Griggs, NASDAQ President, along with Jeff Sprecher of ICE and Lynn Martin of the New York Stock
Look, I
Exchange.
think this is something that
Can we
crosses
ring
a lot
it?
of party lines.
Can we ring it?
I do think that we want a little bit more information because we're now hearing that perhaps SpaceX, that they might get SpaceX shares. And do you have to sell a SpaceX? And apparently people say
Can
you
we
don't.
ring it so I can go
I
on a
was like,
rant?
this was going to be
I know.
this was just going to be index fund.
I can remember speaking to Brad Gerstner. I mean, I really, obviously dealt
All right,
very
I'm
important
just gonna ring it
years
and
and
go on
years
a
ago
rant.
about this idea. And frankly, thinking, all right, good luck with that. It sounds like a great idea, but getting it done, and here we are. And could be an important way for young people, as the president said, to have access to the
Come on,
stock
Mr.
market.
President, let's
And
go.
pay wealth over time, right? It's when you're born, you get $1,000. It's in the S&P, and then you start to have access to it starting at 18.
No, I mean, look, it's right.
All right, market's open. Market's open, and here's the rant. Here's the rant on this. I love this idea. I hate the fact that it is called Trump accounts. We had the president of SpaceX do a huge donation. I think that the fact that it's called Trump accounts will deter people from donating shares of companies. Now, the good thing about this is putting $1,000 in the S&P at the age of right when you're born. I'm going to bring up the investment calculator right now. We're going to look at it together. I mean, this is an incredible idea. The problem is the name. $1,000, no annual contribution. If you get a return rate of 11% over 18 years, that $1,000 becomes $6,500. But if you're able to hold that $1,000 until 65, you're talking about $882,000. I think that this should be done as a retirement account for every child. Every child. $1,000 can become $883,000 over the course of a lifetime. This should have been done back in the 90s when they tried to. Unfortunately, all the Social Security money has been sitting in T-bills, not participating in the greatest economy in the world. They need to overhaul Social Security. They need to expand on this idea. This is a phenomenal idea, and thank you to Brad Gerstner. Thank you for getting this done. If only we could have been called some American accounts, because you know what? The fact that it's called Trump accounts is going to, I firmly believe it will deter people from making donations to this. I firmly believe it. So we'll see. Iran, 10%. It is running. Broadcom, getting back up there over 5%. 380 on the deal with Apple. I think this proves the AI revolution is in full swing. I think we're still in the first inning. I'm seeing no cracks structurally, no cracks in the cash flow, and this is going to be several years. ARM Holdings is up on the news. AMD running, and I think AMD is running because of the news out of NVIDIA. I think that NVIDIA spooked some people, and AMD could capitalize. If I was Lisa Su, I would be thanking my stars right now. Qualcomm up quite a bit, reversal from the pre-market. I do think Qualcomm is one of the cheapest in the semiconductor industry. You got Marvell running a little bit, 254. You got SanDisk over 1,800. We got Micron over 1,000, Rubrik 85, Oracle 143, SoFi, SoFly, SoFire 1856. Meta's trying to make a run at it, 591. Zeta, I would like to see it over 21. We have the conference later today. I will see if I can stream it. I don't know if I can. NVIDIA is pretty flat right now. 195. I don't like the news out of Jensen. I am pretty sure that Tanner is up right now. It is 9:35. So I am going to call him. Hopefully it's not too early for him. No answer. Is he still in bed? We need your take on NVIDIA. Is what I just texted him. We'll see if he calls back. All right, we got oil at 68.61. Tesla's at 392. Hood 112. Congratulations to all the hoodies. Hood is at 112. Uber falling a little bit. I do have a thesis on Uber. TKO Group falling. I do want to start position. TKO Group is looking more and more exciting now. You get a lot for your dollar there. Netflix 76.60, Microsoft 383, Mr. Softy. Bitcoin down almost 1,900. Nebius fallen. Nike, where's Nike at? Down a little bit. Strategy is down 4%. Wendy's is down. Can't really say it's a red day today. A lot of things in the green, and what's in the green is the AI trade. If you look at my watch list, the AI trade is leading the way, and I think for good reason. It's 9:37. He's up. He watches the market. He's up. He's probably shooting a video. It's not like I'm calling the guy at 7 a.m. Tanner is definitely up. The thesis behind TKO Group is fairly simple. It's that live sports and entertainment becomes more valuable. It's already trading at a decent valuation. And when you look at where sports teams are selling for, and those are half-year seasons, they own the WWE and the UFC, Zuffa Boxing, IMG Group, and 2 other organizations. I think that TKO Group could be a prime acquisition target. Christopher Patel, I can do one better. I can just bring you on. How about that? I don't need to call you. I know Tanner doesn't come on in the morning, so just go to WhatsApp. Mr. Softy 383. Not liking that. Mr. Softy should be significantly higher. For the thesis on TKO Group, this is a company that trades at, I'll go to the forward earnings. TKO Group trades at 28 times forward. There's a lot of earnings growth on the horizon, and I think that with what they own, Netflix, Paramount, Amazon, I think they're a perfect fit in any one of those companies. Mr. Chris, how are you?
Good, man. Yeah, you know, I don't know what time it is in Canada, bro. You know, you got to let Mr. Sleepy Time do his thing.
I mean, he's in the same time zone as us. He's definitely awake right now.
I don't know, man. They're Canadians. Canadians operate on a different playing field. We're Americans, man. We wake up early, we make that money, we go to sleep nice and relaxed. Look, this whole thing with TeraWulf signing a deal.
I didn't even get to that yet.
I think the reason why, like, you're not seeing NVIDIA also shoot up is that, you know, a lot of what I've been seeing is TeraWulf has this deal with FluidStack, and FluidStack has this deal with Google. And so this is just like the deal that's coming along for more Google's TPU usage. So Google's idea is we want more and more people to use TPUs, and Anthropic signing this deal kind of confirms that, right? So if you just look at the investment chain, you can kind of see where things go. So Google initially invested in, I think has a partial ownership in FluidStack, and then they're guaranteeing the debt for FluidStack doing this deal with TeraWulf. And Anthropic is signing this deal. So you kind of see that whole ecosystem developing. So the thesis that I had a while ago that people were trying to cut NVIDIA out of the AI ecosystem and trying to boost other companies, it's totally happening. I mean, Broadcom just did their whole thing too. They're going to do custom ASICs as well. So, I just don't think that should be a giant monopoly premium on NVIDIA like we used to give it. And I think NVIDIA is still going to do well because it's just still so dominant. But the idea that it can basically maintain a monopoly position long term, I think is starting to kind of become a little bit questionable. And then if your monopoly position is questionable, then your margins are questionable. And if your margins are questionable, then your valuation is questionable. And so it just kind of cascades into what are we looking at long term for a company like NVIDIA. And some market participants might be looking at like NVIDIA signing these deals with like AI companies for like revenue share as sort of a way for NVIDIA to basically see that demand is coming down in its product and they still need to maintain that high level of growth. So how are they going to do that? And one of the ways is that they're going to finance these companies. And the question then becomes, okay, like how many of these companies are actually going to make money and how many are just going to go to zero? And if a company goes to zero, that means that that's a margin hit that NVIDIA has to take because NVIDIA basically financed the thing, right? So this whole situation is coming up, and I think the rally around AI is just kind of broadening so that ecosystem is no longer just concentrated in just NVIDIA anymore. And that's why like you've seen NVIDIA relative to the rest of the AI like chip sector kind of underperform. So
yeah, so the deal that Chris is talking about, TeraWulf signed a monster deal. It's a 20-year AI infrastructure lease with Anthropic. It's expected to generate approximately $19 billion in contracted revenue over the initial term, and that's long-dated revenue. And the specs of the deal, from what I could find, the Anthropic campus is built to support 401 megawatts of critical IT load. The initial capacity is expected to come online in the second half, 2027, with the full build-out expected early 2028. And then there's a second piece. TeraWulf has agreed to sell its 50.1% stake in the Arbor-Nathy joint venture to a FluidStack-led investor group. And the transaction monetizes TeraWulf's $450 million initial investment at a premium. And the plan is to redeploy those proceeds into wholly owned AI infrastructure opportunities. Huge deal. Like Chris said, and like I said earlier, you have a 5-year strategic deal with Apple and Broadcom. And then you have NVIDIA postponing the next generation until 2028, which doesn't make a lot of sense considering Jensen came out of GTC and showed it off. There's a lot of things happening. And one thing that I can say is Apple is always last to the party, but they're usually the smartest people in the room. And the fact that they are signing a 5-year deal for these chips, I just think that there's a lot more that's going to come. And TPUs are getting bigger. Nobody can say that they're not. The question is, how much more compute do we need? I happen to think it's a lot because we don't have full self-driving. We don't have robotics. Where it ends, I couldn't tell you. I have no idea. There's just too many deals being done and too many people are securing their futures. I mean, look at Ford today. Ford securing, what did you think of that, Chris? Ford securing a 5-year deal with Micron now for RAM.
I mean, I think Ford and every other business has to operate under the impression that the shortage in memory is going to last longer than what people are thinking. And the thing is, the memory market, we don't necessarily realize it, but it goes into everything. You know, like we buy TVs, we buy cars, we buy phones,
refrigerators, everything.
everything has a chip component into it, and one of the most important ones, of course, is going to be this memory module that comes in it. So, you know, I think a lot of businesses are getting ahead of the curve and just saying, look, if I don't secure this deal today, I may have to pay a significant premium in the future. And if I have to pay that significant premium in the future, it means that my products are not going to be as competitive if I have to buy at spot prices and they're much higher, and I have to then charge more to the customer. And if my competitors have a supply chain deal with other makers, or if they get to this deal first, then that means that, you know, I'll have to basically suffer that margin hit. So I think a lot of this is just the market is projecting this crazy demand for memory lasting longer than you know what's currently being put out there, and a lot of these companies taking proactive action. I wonder though how much of the market right now run up in memory is hoarding, because businesses do that, where they, you know, if they see something that's a critical resource in their business, they hoard things, you know. So one of the things that me and you were talking about this weekend was, who was it that had Qualcomm, right? Like
Yeah.
Qualcomm had a lot of deals with memory makers already in place. So that's a kind of advantage that a lot of people don't necessarily think about. You know, like if you have contracted like backlog of things that you signed up, you know, signed deals for, that means that in the future you're going to get that capacity that other people are going to have to pay a premium for. So it's a very interesting thing that's happening in the market right now with regards to where we are in all of this.
CoreWeave is gapping up. I think that the CoreWeave and Nebbia's idea that they are in trouble is overdone. I think that there's so much more compute. I think there's a reason we're seeing chip makers and the neo clouds gapping up. It's interesting that Meta's not gapping up, but you know what? We'll have to wait 3 weeks to see what Zuck says on the earnings call. Hopefully, this guy gets coached by PR not to say metaverse. Maybe he kills part of the metaverse. That would be certainly welcomed by the market. What are you most excited for Q2 earnings, Chris?
To be honest, I'm actually looking at backlogs when it comes to the SaaS players who've transitioned to agentic workflows, and seeing how much growth of backlog there is. Because what it does is it reaffirms the demand picture, where it's actually shows that there's businesses out there that are willing to put money behind this build out. So while everyone is focusing on the deals that, you know, Google is signing and Microsoft are signing and everything else, I think the key is they're signing these deals in anticipation of other businesses buying that compute, you know, whether that be through GCP or Azure or, you know, or AWS. So I think if we want to, you know, basically confirm that the demand picture of AI is not slowing, we kind of have to look way further downstream than just, hey, Google or Anthropic are signing, you know, like this number of people using that, you know, like not token based pricing, what is it called? Subscriptions or something like that. So yeah, I'm just looking downstream. I do think that SaaS has a tailwind coming up. So, and I'm more relying on SaaS to do a lot of the heavy lifting in my own personal portfolio, with exposure to companies like IREN, you know, also being a part of what is it called, like like, you know, like it's a small part of your portfolio, but it's probably like one of those things that could be a high returner, an asymmetric upside. Yeah, so I'm counting on companies like IREN to be more asymmetric, especially like right now. IREN is going up because they do have a lot of capacity that's on, you know, that's basically ready to go. All anyone is waiting on IREN is just basically a deal getting signed, you know. So when they see other companies, their deals are getting signed, and then you've had news come out this weekend that Anthropic was looking for Australian exposure, and IREN being one of the players over there, just kind of shows that, you know what, there could be a deal on the horizon. And if a decent deal, especially one like the TeraWulf deal, comes out, I think IREN could be re-rated much higher than what it is today. So
IREN's in the right spot. I think we don't know how much more compute we need. Their CEO comp package scares me a little bit, but I've seen crazier ones. So
Yeah, I mean, I think the thing that people are upset about is that the term of the compensation wasn't linked to performance rather
yeah,
than,
that's my
you know,
beef.
yeah, if it was linked to performance, I think it would have been a much easier pill for people to swallow, where it would have been like, hey, listen, if the stock gets to X amount of dollars, then you get this massive upward, payout. And if it doesn't, then that means that the shares don't really do anything for you. So, a lot of people are bullish on SoFi for that same reason, right? Like they're not questioning the compensation of Anthony Noto getting paid hundreds of millions of dollars. What they care about is that it's only under the performance obligations that have to be met to get there. So, just kind of, it would have been probably the market would have been a lot more forgiving had they announced something that was more performance based.
100%. And Noto missed out on 2/3 of his PSUs. I mean, he got the ones for 25, but he did not get them for 35 and 45. So that's what you want to see. You want the CEO to benefit and the executive team to benefit when the shareholders benefit, not just for staying at a company for a time duration, my opinion.
Yeah. I mean, I've seen it. I've seen plenty of that happen. Like a lot of times, believe it or not, sometimes investors actually hate that too. Like if you look at Axon, like Axon in 2017, 18 wasn't like that big of a company, but their CEO's entire compensation package was pretty much all stock-based comp. Like, but it was like performance obligations, not just straight up shares, right? What happened was then Axon had the George Floyd thing happen, and then every cop in the country started getting body cams, and the company just went absolutely berserk higher. And then if you look at the compensation, I think the CEO of Axon was making like $1 billion, but the reason why he was making that much is because of that compensation package that was directly tied to that performance. So every shareholder of Axon, they did like I think a 5 or 10x at that point. So they were like, whatever, if you want to pay this guy, it's totally fine by me as long as he's delivering. So
And we still have the chips and the neo clouds controlling the market right now. IREN is up 13%. We're going to go to the stock combine in a minute, stock draft, see how much Chris is changing because he's got IREN. We got AMD up 8%, ARM up 6%, Qualcomm 6%. I still think Qualcomm is super undervalued. CrowdStrike 6%, Broadcom 5.5%, CoreWeave 5.5%. We'll take it. SoFi just lost 19. Micron's holding on the 1,000. Zeta's over 21. Let's go and let's take a look at where everybody is in this year's stock draft, which is 3 weeks in, I think.
yeah.
All right. Matt is still in the lead. I actually don't know if this is updated yet. It's not updated. It hasn't been, should be updated. I guess it is updated. I'm down 5.49%. Man, we did the draft on the worst possible day, didn't we?
Yeah, I mean, that's just how the
It is what
market
it
is. It is what it is. And the thing is, like, a lot of us chose exposure to the AI infra build out. And I think the last few weeks have just been really bad for that. So, we like look at mine and Jason's portfolios. Like we're loaded up to boat with AI infra,
Yeah.
and those are our biggest losers. But if they come back, then that means
Oh,
that
they'll
me
come
and
back
Jason
with a vengeance.
we'll come back nicely too. So, like IREN is down 35% from where I bought it literally 2 weeks ago. So you can see that when you're dealing with these smaller companies that are like in the $5 to $10 billion range, they can swing pretty hard. I'm actually kind of surprised to see Nebius being that low.
Yeah.
Considering that's probably one of the stalwarts of the current build out.
And who would have thought Rubrik is Tanner's number one company right now? Craziness.
Yeah. I mean, it's happening with me. Like Molina and Viva Healthcare Systems are both both doing well for me. So they're basically holding me up. Like Viva's up almost 23%, Molina's up 16, and ServiceNow is up 11. So I do think that there is some rotation though, Steve. I don't know if you've seen the charts around NASDAQ performance versus Dow performance year to date, but the Dow is actually beating NASDAQ.
Yeah, I've tracked some of it. Look, right now is not when I'm really looking at rotation, only because we're heading into Q2 earnings. I'm more concerned about where the numbers are. To me, where people are moving money is not as important. I know it's very important to a lot of people, but I don't know. To me, it is what it is.
I think what I'll be looking for also is just the 13Fs that come out next few quarters. Because if there has been any super investors kind of like, taking some off the top when it comes to the AI names that I mean, I think some of the ones that I probably respect the most that give me a lot more insight is something like what's his name? Not Druckenmiller. Druckenmiller's
Drunk
good.
is one of my favorites.
Yeah, Druck is definitely one of my damn it, I can't believe not Steve Cohen. Damn it. It's like on the tip of my tongue. Hold on one second. Let me just go to data. Who does Jesus.
Tepper?
David Tepper. Yeah, David Tepper is probably one of the best ones when it comes to momentum hunting as well, because he was on Micron like 3 quarters ago, and that's probably one of his biggest winners. If you want to go to Datarama and check it out.
Can you bring it up?
Yeah, one second.
Let's see. I built something for the rotation stuff, and I can't freaking find it.
Yeah, here we go. Value. Tepper. There's the Appaloosa. Yeah, so if you look, a lot of his buys in the last, like in 2025, fourth quarter, it was a lot of Micron, almost 1 million shares of Micron, a ton of Google, ton of Lam Research, Microsoft, and then like literally just Micron he added again in Q1. So the things that he's been selling are all of this stuff. So he sold a little bit of Meta, L3 Harris, some United Healthcare. Let's see. Yeah, so he's still pretty heavy in Micron right now. He did take very few in ASML, and he took profits in NVIDIA. Yeah. Like I said, it's always a good idea to just look at the top companies that some of these guys have invested in. Now, this is not to say that they're going to get everything right, but they do have a way of getting a good amount of insight into the market. So at least you can get a fundamental understanding of like where we like. Look at this in Q1, he bought a ton of SanDisk, 281,000 shares of SanDisk.
Look at it. Look what is at the top. Uber.
Yeah, bought a lot of Uber.
I have a crazy thesis on Uber, and it seems like Chris Camillo has the same one. Everybody told me that Chris was talking about it, and I watched and I couldn't believe it. So I was saying to my wife the other day that I feel like GTA 6 is going to make people more hermity than they already are, especially that it's coming out near wintertime. And Uber Eats and DoorDash are going to catch a bid because of the amount of people ordering food and just staying inside.
You know, that's not a bad idea.
I'm serious.
I had a very similar thought to people upgrading their internet, because you're going to need a lot more, like, especially if they do have like the world building feature integrated into it, that you could probably see more people like getting lower latency, higher bandwidth internet. You know, that could be a thesis on like what I'm thinking. And if that's the case, then companies like, if I was the CEO of, let's say, either Charter or Comcast, and I wanted like a bunch of people to sign up for my internet, dude, that's what I would do. I'd be like, listen, you sign up for us for a year, we'll give you GTA for free. It's only $100, right?
Yeah.
But the value, the lifetime value that you would be getting from people signing up for your internet would be crazy. So I'd say just sign up for a thing and partner with Rockstar and get that deal done, man.
No, I'm with you. So, Chris, this is the sector rotation mix. It updates every day for me.
Nice. What are people rotating into?
So, tech is weakening, energy is lagging, value, financials, industrials, and utilities are leading right now.
Yeah. So there is a little bit of safety. Like I think that's a normal thing about the summer too. Like summertime, people tend to go into more safety trades anyway. That whole thing with sell in May, go away.
I think that's been done for a decade. I think that's bullshit.
You think so?
Yeah, I mean, think about it. This isn't the 80s and 90s where people go on vacation for 2 or 3 weeks, take their kids to college, and don't have access to anything. You have access to everything on your phone these days. I just don't believe in the whole sell and May, go away. People are trading during the summer. People are still investing. I think it's a different market, and that's just an old way of thinking.
Yeah.
I mean, think about it. If you're a big fund manager, you're not going to be checking your phone if you take a 2-week excursion to Europe? Of course you are.
I mean, I think it's also to deal with like performance bonuses and all that other stuff. Like, so a lot of times these black swans, they come in, and the thing is, if you're on vacation, you may not be able to deal with it. So maybe that could be some reasoning behind it. And people follow this pattern throughout every year. So they kind of just adjust their trading around that. Right. So like October, like usually from what I've seen is that July is usually like the best month for the markets. And then so like August and September are usually pretty like not that great. And October, starting like mid-October all the way through Christmas, you just get this massive upward move and companies just doing really well. So, barring any sudden black swan events that come in during the summer for whatever reason, I think we're gonna have a pretty good year. It's just we're probably due for some corrections here and there.
Yeah, and look, I think that not the most popular things will win. I think that what won in the first half of the year may not win the second half. Not saying they'll go down, but I think when you look at Uber's so undervalued and people are missing out on it. I don't think people are actually, no, I'm going to bring this up. When you think about why Uber went down, it's not because of their business fundamentals. It's a $148 billion company. You look at their financials, this is a company that has absolutely scaled their revenue, absolutely scaled it, compounding over a 9-year period at 33.6%. And then if we look at their cash flow, inflection point happened. This company is so profitable. They do about 9.9 billion in free cash flow because their capex is basically nil. So on ops cash, it's trading at 15 times. This company is cheap, and people think it's going away because Tesla's going to have some super app. When has Elon ever delivered anything on time? And I get it. Tesla gets a premium for certain things, but the idea that Uber's going away when it already has everybody's information, everybody's credit card, this is a sleeping company that has the catalyst of GTA 6 behind it from Uber Eats. I'm telling you, that's going to be a real catalyst.
Interesting. Can you share the screen real quick on like the historical performance on a monthly basis? So
what is this?
So someone asked, it's like, oh, where's your data? So this is what Ed Yardeni from the S&P 500, like historical monthly return. So here you can see on average, July right here is usually like, this is the best one since from 1928 to 2026. So you can see here, August, usually it's about, not August, sorry, July, it's about 1.7%. and then it just goes down. And September is usually like the worst month. So, and you can see on average up and down, like, so basically here's the data that just shows that usually we get a much weaker September. So, but this is not guaranteed, by the way. This is not a like, oh yeah, this is always going to happen, but it's just, the chances of something happening are more than before. And some of it could be just the cyclical nature of how the markets operate, but usually July is like the time where you really want to be in the market and then start to, hedge a little bit going into September and then ride the wave higher for the rest of the year. And you can see one of the best things is that return in October, November, and December seems to always be that nice 3-month positive. So, that's usually where you always want to kind of be, and usually buy that dip in September/October.
Yeah, and look, it is real. I just think that there is a changing dynamic in the market. But look, the data is the data. You can't refute data. So
Yeah.
It is what it is. Pharma's getting hit. Pfizer not doing well. I got to relook at Pfizer one of these days. I think Pfizer's an interesting dividend play. I think the dividend's over 7% right now, which is pretty wild.
The challenge with Pfizer, though, and this is something that I'd caution you against, is you really have to be careful on the timing of their expiring patents and then also their new product lines that are coming out at the same time. So a lot of pharma companies, they typically have these, periods where they're going to be extremely profitable because they have these blockbuster drugs. But as they come off their patents and they go generic, all of that cash flow ends up going away. So I think a lot of times people, they try to look at it, especially with big name pharma companies, they'll like, oh, well, they generated this much money the last 5 years, like they're undervalued. But the thing is, the market is always looking at what's that next big drug that they have coming.
Yeah, they acquired some big company last year. I just can't remember the name of it. It starts with a C, I think. Big company. They're fortifying their future. That's why I like Bristol Myers. Bristol Myers has done a lot of small deals, and Bristol Myers has responded very well to it. Pfizer's just getting crushed right now.
Yeah, I'd look at something like Eli Lilly too. I know Eli Lilly's already at $1 trillion market cap, but with their Mounjaro franchise just absolutely exploding, it's been one of the best compounders ever. And then they have a bunch of other drugs in their pipeline that are in the same category, like retatrutide, and then they also have some other ones for some other conditions. So Eli Lilly has a lot of cash flow. So they've been winning, and they could still keep winning. Novo Nordisk is kind of right there too, but Novo Nordisk is in like the back pedal right now because their GLP-1 franchise has basically been losing market share to Eli Lilly's. So, but Novo Nordisk is still up there in their diabetes care and diabetes market. So, each company has its own kind of like up and down thing. But I'd say if you were trying to play pharma and trying to do like long-term compounding pharma, I do think Bristol Myers might be a good play. There is a couple of other companies that might be a good interest, but they're not in the pharma sector.
There's only 3 that I'm in. I'm in AbbVie, Bristol Myers, and Pfizer just for the dividends.
Yeah, look at what is it called? Look at ISRG, Intuitive Surgical.
Oh, I love them. I'm
Yeah.
just trying to find an entry point. I love them.
Yeah, I think one of the things with Intuitive Surgical, and even another company called Medtronic, they're worth looking at. Medtronic is trading at a pretty good discount relative to where they could be in the future, especially because if you ever go to the hospital, one of the things is like, whenever you're doing surgery and everything else, you need to do a lot of procedural planning. And Medtronic and these guys, they do have like products coming online in the next few years that do integrate like AI into the operating theater that could theoretically help doctors, take care of patients at a faster pace, especially during the OR. So there's a lot of like cool technology that's coming around thanks to like advancements in AI. And I don't think the market necessarily is giving a lot of those companies credit. So I'd say just look around. You know, they're around there. There's another one like Hologic is a good one. But yeah, you'd have to really like dig down deep into the the healthcare like device manufacturers that could benefit. There is one trend that I think that we should all kind of keep our eye on also is that patient healthcare outcomes might actually be going up significantly over the next few years. And I think the need for like a lot of like maintenance medications may start going down. I'll give you a couple of examples. Like because of GLP-1s, the number of like the patient population in the United States that's obese is actually starting to go down, which a lot of people thought that that was like crazy to see. But on top of all of that, and this recent study just came out, like the younger generations are not drinking nearly as much. Did you see that? Like how much money the alcohol makers are losing?
No, I didn't.
Yeah, like the newer generation, the younger generation is just not drinking. And if you just look at all the conditions that people tend to kind of develop over time, a lot of it is due to excessive alcohol consumption. And so alcohol consumption is going down. So, you know, there's also another push by a lot of people to eat cleaner and eat healthier. So I think that there's like this massive like upward move in cleaner living that could like come down and basically make healthcare more affordable over a long term. So win for Americans. Americans.
Well, we have some news. Somebody just bought $2.1 million of Qualcomm calls. 190 strike expiration 8/7/26. Somebody just piled in big league on Qualcomm. AMD is over 560, trying to get to 570, and Qualcomm is now up 6% today. Wow. 2.1 million in the Qualcomm calls. And Microsoft is now laying off 4,000 people across Xbox and another division.
Jesus, man. You know, it's funny on one side, a lot of these companies, they say like AI is not laying people off, but then you look at these headlines and it's like, huh? Like what?
Oh, I'm sorry. I read it wrong. Microsoft to cut 6,400 jobs, half in Xbox gaming, overall 4,800 jobs across sales, according to Business Insider. There will be more changes ahead. Microsoft cuts representing 2.8% of employment.
Yeah, I mean they have a new leadership over at Microsoft for their Xbox division, and they're trying to kind of rework things. Like one of the things, like her name's Asha something, and she's basically saying like they want to kind of revive Xbox a little bit and like make Xbox great again, quote unquote. The challenge is, I think there's this massive transition that's kind of happening with a lot of people, you know, like going away from like like what, just be honest, man, a lot of the games that have been coming out have just not been as good as what they were in the past. And so a lot of people are kind of like not really buying the consoles like they used to, and the pricing on these things is kind of insane. And then all the games have like these microtransactions that are in there where they're always trying to like milk you until the end of time. And so I think there's kind of been some pushback against all of that stuff too. So I don't know. And then there's like a lot of people that were kind of pissed off about like cross console exclusives. So that kind of hurt the brand. So I think she's just clearing up a lot of the folk over at Xbox and trying to kind of revive the brand. So we'll see how that goes.
We will see. AMD breaking out today, and I think it's because of the NVIDIA news. I mean, it does not make sense that Jensen would come out if this is correct. Now, we do not have any definitive news. This was from semi-analysis that the next generation Kepler is being delayed. The NVL 144 rack architecture by more than 12 months. And I think this is why AMD is absolutely mooning right now. The crazy part is, last time I checked NVIDIA, Why is it not going? There we go. NVIDIA is still up on the day. Even after a report from SemiAnalysis that their next generation is getting delayed by a large amount. Now, Jensen came out and showed everything at GTC. If this report is true, it gives AMD significant time to catch up. We'll see what happens. But AMD is absolutely running.
But the other thing, though, and I hope people realize this, NVIDIA is almost a $5 trillion market cap company. Like,
Yes.
to move this thing 10%, you're asking for a heroic kind of like move. Like, that's why sometimes when like I'll listen to Tanner and Tanner says it's going to like 3,000, I'm just like, I mean, not 3,000, like 300. I'm like, okay, like I can see that, but probably not gonna be like overnight. It's probably gonna take longer than you're thinking. So you have to kind of remember that now. I think AI, especially NVIDIA, is probably more on like the mature side of the growth in terms of like stock price. The challenge is if there's any sort of slowdown in growth beyond what the market is expecting, this thing could get re-rated lower quicker. So the risk of upside is a lot more. I don't know. It's just there's not a lot of upside relative to the downside potential under a catastrophic like situation. So the risk to reward is not that great for NVIDIA.
Well, we got new news, and I think this supports my idea on take two. Blue Owl, one of their funds just took a minority stake in the Cleveland Cavaliers.
What does that have to do with take two?
I'm sorry, TKO, not take two.
Oh, TKO. Okay.
TKO. I screwed that one up.
Yeah.
Blue Owl taking a minority stake in the Cleveland Cavs. I am telling everybody, live entertainment is going to be the next big thing all these companies try to secure. And TKO Group, people miss it for so many reasons, whether wrestling is fake, UFC is a blood sport, huge fan groups that can't be replicated. Organizations have tried to take out the WWE, then going into the WWF, trying to go in the WWE. I mean, you had ECW, you had WCW, you had TNA. Nobody can decrown them. They're always going to be the big dog. And then UFC, we've seen PFL, we've seen Bellator, we've seen Strikeforce. None of them can hold a candle to it. Those are two crown jewels. And then Zuffa Boxing, there's no reason why that can't become the premier boxing league, because the big problem is all these different federations, the WBA, the IBF, the WEC. It is crazy that we didn't get the fights that we should have got over the past 2 decades because of all these different federations. And I think if Zuffa Boxing can become the big one that everybody goes to, TKO Group is just so undervalued. I could see them getting acquired by Amazon or Netflix. That's my own personal opinion.
I mean, I definitely see like the value of like a combination of live streaming and also like subscription based programmatic shows that you normally have. So the company that has the deepest pockets and the balance sheet that could probably make some major acquisitions, especially when it comes to live, is probably Netflix. Like Netflix is just on another thing, but I don't know if they would necessarily buy or if Dana White would actually sell it. I think instead you could see like, and what we've already seen is like just long-term deals where these guys are getting paid crazy amounts of money. Like if you look at the deal that Comcast actually signed with the NBA and the Olympics and all these things, it's crazy, dude. It's crazy the amount of money. Like just look at what Iran did. Iran is paying $50 million a year to the Cavaliers to do nothing but just branding. Like think about that. $50 million a freaking year for what, a logo?
Crazy.
It's pretty insane.
Crazy. But this is the next big thing. It is. And we got to look more into Take Two. And the more that I look at this, like I downloaded a couple weeks ago the enhanced version of GTA 5 for the computer, and it is so good. And I really do believe, think about how expansive the world is. I think that what they're going to do, they're going to set this up for content creators. They're going to set this up for a whole online marketplace where you can make your own stuff. They're going to try to make this a legitimate second life for people. And this game is going to live and die with how interactive with everybody else you can be in GTA 6. And if they actually succeed on that, this has a decade plus long lifespan.
You do know that when it
was
comes
a
out, it's
decade
only
old.
going to be, I think it's a console exclusive when it first comes out.
It is. It's not on PC.
So how are we going to play, man? Like, are you going to go out there and buy a PS5?
Yes.
And you're going to link it? You're going to get a capture card and do everything?
I don't have a choice, Chris.
Dan, I'm going to have to do it too then. Like, I have a
I
really
don't have a
good gaming
choice.
rig. Like, when are they going to do, like, the PC game?
Last time around, I think it took a year or two for the PC version to come out.
Jesus, damn.
But when I think about it, they did not spend a decade plus building this game just to capture the money on pre-sales. This is going to be microtransaction heaven. This is going to be, my opinion, a monthly subscription for cash, for weapons, for whatever. And then people are going to really build huge Twitch channels, huge YouTube channels. And I think that they're going to figure out a way for microtransactions for in-game money to be exchanged for USD. And I think that they're going to take the method that Blizzard did with World of Warcraft. And what World of Warcraft did is to combat people farming gold and selling it for cash and doing an in-game trade. They made it where you can buy a token for game time because WoW is a subscription-based game. So you can go online, you can buy a token for $20 or whatever it is, but then you can sell it in the auction house for gold. And people will farm gold and buy the token in the auction house so they don't have to pay real money to play the game. And it's a way that outside people who don't have the time to farm gold can use real dollars for the token and sell it online for in-game gold. I think that Take-Two is going to take that model and put it on steroids, and we're going to have such a crazy ecosystem that the reoccurring revenue flywheel could be worth billions of dollars annually. I really do believe that. And I know not a lot of people think that GTA is going to be big or not everybody plays video games, but what you're forgetting is the younger generation was raised on video games. And it's not just kids that are 12, 13, 14. It's guys in their 20s. We're raised on video games. This game is going to be so big from the 16 to 30-year-old group. I think people are wrong on the impact it's going to have. And coming out in November when it is cold in most of the country and then rolling into winter, I think that this is going to be all people do for quite some time. They're going to get very addicted to it. My own opinion.
You're going to say people are going to get brain rot from GTA 6?
The amount of, I'm going to tell you this. If we come back in December and I show what my Instagram feed is going to be, 30% to 40% will be GTA 6 reels. I'm telling you. Like, we were at my parents' house on Saturday, and I put this clip from YouTube on the screen, and we watched somebody do the heist at the military base and get away from a 6-star chase. And it was crazy. Like, with the stuff that is going viral on YouTube from GTA 5 is incredible. I can only imagine what this is going to turn out to be with GTA 6.
Yeah.
We're going to do a poll. How many people here? We have 4,000 people. How many are you planning on playing GTA 6? Because I'm going to do a lot more research on GTA 6 and what they haven't released a lot of stuff yet for the in-game experience, but wait till online comes out. Online's not coming out for a year, I don't think. Please vote on this. We need to see, because this has implications for Take-Two, and I think Take-Two can be absolutely huge. All right. So we already have 250 votes, and we're at 40% yes. I mean, I really do think that we are going to get a huge amount of people playing this game. I don't know if it's priced in already.
Yeah, that's one of the things that worries me about Take-Two. It's like, is the price? I mean, it's already like what, a 45, $50 billion market cap company.
It's
right?
expensive.
So it's not like cheap by any standards, but it's also probably got a nice durable cash flow business now that could theoretically do like market performance going forward. But do I think that, like, if this thing was like, let's say $20 billion, I'd say there's a lot of upside. But at 50,
Right, 47 billion, and let's look. And I think this is a situation where the analyst community is wrong. I mean, on revenue, they're only expecting 27% this year, or 28% increase this year, and 7% next year. I think that's wrong. But we'll see. That's what makes the market.
Yeah, that's exactly right. That's what makes the market, right?
And earnings, it's not as expensive as I thought it would have been. It's under 40 times, and then there's so much growth next year on earnings that's under 28 times.
Yeah. Like I said, this thing will compound, so it's not like you're not going to get a good return out of it. You're not buying like an unprofitable business.
Right.
But one thing that I do get worried about is that if this thing, for whatever reason, does not live up to the expectations, and like the game's glitchy and buggy and the storyline is like really crap, which I doubt. Like, these guys have figured out like the genre that they're in, so I do think they'll be fine. But that's still always a risk.
And we're going to close the poll out in about 30 seconds. So get your votes in, please. We have almost 4,000 people here. Please vote. This has to do with stocks, because this is going to give us there's no better way than to actually see what's happening on Main Street than polling our community. Because this is probably not the community that focuses on gaming, but the fact that we're at 38% yes in a finance community. Imagine what would happen if we did a poll at a high school or a college. Just really think about that.
Yeah.
All right, we're going to close it out in 5, 4, 3, 2. Get your votes in. 1. The poll is closed. And the official, we had 690 votes, 38% yes. I mean, that's a pretty big cohort of a finance community. That's why I think there's an opportunity in Take-Two. I think that these numbers are incorrect. I really do. I think the street is missing out on how big here's why. I don't believe, and now look, I don't know any of these analysts, but what are the chances that these analysts are actually gamers, or actually played WoW and understands the in-game currency and the in-game marketplace that they created, or a game similar, and what the online experience is likely to be for GTA 6 when the entire community is playing it? I think that that's going to be bigger than the initial game sales. Oh, wow. Okay, I got to cut over. Give me a sec. Chris, we got to talk about this. Oh, boy. I just saw the list. I just rewinded just a little bit for everybody. Give me a sec. All right, here we go.
Anthropic has been looking to build some of the more powerful models out there and run its current technology. All of this requires enormous amounts of power and then specialized infrastructure.
Look at that. Look at that. How crazy.
Yeah. Yeah, I mean that's why Leopold is super bullish on all of the names like Iren, and I think he's got, what does he have? I think he has Nebius. Can you pull up that 13F for situational awareness? I think he's got a pretty big position in Sharon AI too, which is
All right, I'll pull it up. Let's watch this.
That can't just be rented overnight. So these AI companies and this entire AI race is increasingly coming down to deals like this and who can secure the most chips and the most data center capacity. So it does add to a string of other compute deals with hyperscalers that Anthropic has done. You've seen CoreWeave and Broadcom in that list as well. TeraWulf is one of a handful of crypto mining companies that has also pivoted to AI. They have these existing campuses, and that is one advantage for these former crypto companies. They can service a company like Anthropic pretty quickly versus starting from scratch. This lease is expected to bring out about $19 billion for TeraWulf. If you can see that reaction in the stock, it's been up about 80% this year. Double-digit rise on this deal news earlier this morning, guys.
Yeah, key is always access to power, right, Kate? I mean, that's kind of the gating issue, and these old Bitcoin miners have that, or some of them do.
You see these, I used to cover Bitcoin back in the day, and you go to these campuses, and 5 years ago, they had the capacity. There was this race to get sort of similar data center set up, and this infrastructure for Bitcoin, flash forward, flavor of the week is obviously AI, and they are in pole position to be able to do that. It is very difficult. If you've seen David going out to some of these facilities, to build these, it takes years. The AI now, former crypto companies that have moved into AI are able to just kind of flip a switch and turn it on, and therefore have been sort of the go-to for some of these big infrastructure deals.
Is there any correlation between the price of Bitcoin and the Bitcoin miners pivoting to AI? Is there kind of a chicken and an egg situation there?
It's such a great question. I haven't looked closely at the correlation, but these deals, this pivot has been going on for years. So I would say, if anything, it is very much priced in and probably doesn't affect the price of Bitcoin or crypto, which seems to be really trading on sentiment versus any of the infrastructure and ability to sort of mine new Bitcoin. I'm sure 5 years ago it would have, but somebody should study that. Look at the correlation between the deals. I would say my guess is no at this point.
All right. Well, you're busy these days with a lot of other things. Nice. Yeah. And you're on the East Coast there.
Exactly. Here in New Jersey.
Yeah.
All right. So let's bring up situational awareness, 13F. All right. Here you go, Chris.
look at that. He's got a bunch of puts on the chips, right? But he's got a long position on
Nebius is the biggest one in the portfolio.
Yeah, I think the puts that he has, I think those are more protective puts with a notional value rather than like he's bearish on this particular industry. And then on top of it, he's got Sharon AI.
Yeah, because look at this. Micron calls in addition to Micron puts.
Yeah. He's got Iren, Core Scientific. Interesting. Core Scientific was almost bought out by CoreWeave. He's got CoreWeave calls. He's got BE calls, which is that Bloom Energy, Clean Spark, Riot. Interesting. Yeah, that Iren position is very interesting. It'll be interesting to see like what he does with it next quarter.
Let's see what else. He's got a lot of holdings in here.
And everything is literally either an AI company or an AI proxy or like an AI beneficiary of something. So, like I said, his portfolio seems to be very concentrated in the AI upward swing trades.
Yeah. No, it's also the industry he's familiar with.
Yeah, of course. Yeah.
Some stuff in here I've never heard of, too.
Which one have you never heard of?
Never heard of BW, Pump.
Yeah, I didn't hear those either.
PSIX, BTDR.
I think that's BitDeer. Another AI to a crypto to AI like company. Applied Digital is like it's a company that can do like the data center build outs for companies. I think they manage that stuff too. So
Yeah, the biggest positions is all tech. Bloom Energy, I mean, we'll see what happens with Bloom. But the market is looking good, ladies and gentlemen. Market is looking good. IREN is still running. AMD 567. Qualcomm 187. I mean,
don't say the market is running and then just show like the AI names running.
Our market is running.
Show the entire thing, brother. Show the entire thing.
Our market is running.
Our market is running.
Our market is running.
As in all the companies that I like.
Yes. Yes.
What about everyone else? Like, pull up FinViz. Let's take a look at like the rest of the market.
Yes. Pulling up the indexes. The market is actually running. The NASDAQ is up 300 points. The S&P is up 41. The Dow is down 121. But yes, tech is running, ladies and gentlemen. The NASDAQ 100 is up 474. Okay. And on the more expanded list, here's the heat map.
Yeah, tech is up. Everything else is kind of given. Everyone is rotating back in. Looks like this is back and forth rotation, man.
Yeah.
What about year to date? Can this thing do year to date?
No, but I can make it do year to date later today.
Yeah, that would be cool to see like what the year to date like is. You could do that on.
Oh my God, Reddit just hit 200. Reddit just hit 200. Zeta has a big conference today that they are speaking at. Wealth Matica, who follows Zeta closer than anybody I know, thinks that there's going to be big announcements today. I cannot wait to see what Steinberg announces, if he announces anything. Oracle here, very enticing, 142. Let's see. Energy Transfer, I think, is exciting here, under 20. SpaceX, 162, hanging in there. Energy, moving down a little bit. Verizon, 42. Take-Two has lost the entire pump from last week. And this is not what you want to see. You do not want to see Altria Group over 70. In fact, you really don't want to see Altria Group over 65.
Why is that?
Because if people are buying up Altria Group, it really means that people are worried and they're looking for a flight to safety.
Ah, gotcha.
I mean, Altria Group at 71. Like, I'm a long-term shareholder of it, and that just does not make sense.
I mean, the number of people on Zyn is growing like crazy. So, I mean,
yeah, but Zyn is Philip Morris, not Altria Group.
No, I know, but I think Altria Group has their own.
They do. It's should I forget the name of it? But they do have their own.
Yeah, I think the growth in nicotine pouches is something that's
huge,
and that could be a pretty durable upward move for them. So, just I'm keeping my eye on it. I don't know, like I like the tobacco companies in terms of their fundamentals, like, numbers, but morally, I just can't buy them. And I've spoken to you about this.
No, I get it. Listen, I get it. And it is what it is,
Yeah, that business is just
also Altria Group's not interesting here. 5.83% dividend yield. I mean, look, when I bought this was a 10% dividend yield.
Yeah.
It's not interesting here.
Well, the thing is, like, what kind of growth are they likely to see?
I mean, a lot of their growth is coming from buybacks on EPS.
Yeah. So they've got a durable thing, right?
Huge durability. I mean, I'll show you exactly how durable it is. And this is one of those things. Nobody wanted to listen, and everybody just wants tech, not crisp. I'm just saying, like, a lot of people just want tech, and there are interesting aspects other places.
That's Thermo Fisher.
Like, if we look at operating cash flow, that's really durable.
Yeah. That's Thermo Fisher, though.
Oh, shit.
I was going to say, I was like, if you're trying to make a point.
How did I type in Thermo Fisher?
I don't know, but when you put it in, I was like, I don't think that's
Hold
right.
on a sec. MO is not coming up. That's why.
Okay.
My system not allow me to bring up Mo for some reason. The fuck is going on here?
There you go. Now you know you got a thing that you got to work on.
No. How can I not bring up Mo? What about PM? I can't. How can I not bring up tobacco companies? BTI?
Nope.
My system is locking me out of Altria Group. This is not okay.
It's telling you like stay out of tobacco.
That's crazy.
Maybe it's got a conscious, moral conscious too.
Hold on. Let's try this again, because I think I was able to bring it up after I put a. Hold on. Add ticker.
Yeah.
So I can bring it up there. So I got to figure out why that is. But if we look at the blue, 9.3, 8.8, and 9.3 billion in operating cash flow over the past 3 years. Very durable, very sticky. Now they're not growing, but it's enough to feed the buybacks and feed the dividend.
Yeah.
My system has morals. Yes, it does.
It's got morality built into it.
It doesn't want Steve to use tobacco. Its existence is tied to Steve's health.
Take a look at like all the alcohol names. Can you bring any of those up?
Yeah. What? Diageo?
Yeah, Diageo is probably.
What is it? DIA? No, that's DEO.
Yeah.
Not able to bring it up. Are you fucking kidding me?
It's got a conscience, man.
My system has a conscience. Like, seriously, you guys see me typing in. My system has a conscience.
Yeah, it's DEO.
Oh, here we go. All right, it came up. Let's see. So cash flow.
Okay. So look at its total, like look at the stock price and then look at the revenue on this thing. The revenue growth has absolutely been dismal.
So let me do revenue, we'll do gross profit, and we'll do operating income.
Yeah.
Yeah, the revenue growth year over year is negative. I mean, it's year over year, not much, but yeah, pretty wild.
And then if you look at the stock price, this thing used to be almost $200 a share. And now it's like,
oh, the younger generation's not drinking the way our generation did.
Yeah. Yeah.
I mean, look, our generation used to stay out till 1 to 3 in the morning, then go to work. This generation goes to the gym at 6 a.m.
Yeah. I mean, it's a good thing.
It's a great thing. I'm not knocking. It's a great thing. I'm just saying there's a reason why alcohol companies are not seeing the sales volume they used to.
I'm looking at, it's weird, but I was watching, you know who Myron Gaines is from like the Fresh and Fit podcast? Like
sounds familiar, but I can't.
Yeah, he was talking about this. He was like, "Oh, young men are like giving up on the club. Like, I haven't gone to a nightclub in like 20 years, so I couldn't tell you if this is true or not. But like the younger men demographic, like they're just not doing all the crazy stuff that we used to do in our 20s. And so a lot of them are just like, oh, why am I going to go out to bars and why am I going to go out to drink and, you know, go to a nightclub and spend all this money and I'm not getting anything out of it. And I think there's like societal changes that are also kind of putting this whole thing, this industry in the back burner. So I think part of it is, of course, like the grinding and health, but then there's also like a component of just different tastes or different like aspects of cultural changes that have been happening.
Yeah, I never understood club culture. I was never a club person. I don't understand it. I don't know why anybody in their right mind would want to go there and spend a couple of grand at the club, especially a lot of young people who probably don't have that money. And you're going to basically hang out with people you're never going to see again, or you're not going to see again after a month from now. So the whole model doesn't make sense to me at all.
And when I was in my 20s, I was out all the time, bro. That's just.
Well, I'm not saying I wasn't that. I'm just saying I wasn't a club person.
Oh, okay. Yeah.
Bars is much different than clubs.
Yeah, I was back when I was in my 20s in college. We used to do like a whole bunch of stuff, and we'd like book out. Like I was in a fraternity, and that was like one of the things that you did. Like you did like club parties where you would go to a club, get a deal together with them. You would do like a bar guarantee. Like okay, people would spend this amount of money, and then they would share the proceeds of the door sales with you. And so that's how we kind of like funded our dues. And yeah, we used to have a great time, man. Clubs were awesome back in the day, man. It's just once you get after a certain age, it's just no longer like, I don't know. It just doesn't. It's not as appealing. Shoot, man. I'm thinking about like the 20s when I was just grinding on, bumping on it, just a bunch of freaking. Oh, God.
Rena's favorite company, AMD 570, is running. Look at this. AMD wants to go higher, and it is I think NVIDIA's news is bullish AMD. Can we say that that's the trade today? NVIDIA supposedly pushing out their chips to 2028 is giving AMD a very big opportunity to try to catch up.
I was actually talking to my wife about this. Bro, I feel like we were spoiled in our 20s because I grew up at a time where we had literally the best music ever, dude. We had 50 Cent, we had Jay-Z, we had Eminem, and then it just kind of all went downhill, man. Now you got these mumble rappers, you can't even understand anything they're saying. Just
I'm not a fan of today's music. That's just me.
Dude, I can't listen to most of like what's coming out these days. Whatever. I don't even know what they would play in the clubs, to be honest with you. All right, sorry. I had like my own like nostalgia moment for a second. I got to get back to being an adult again.
Reddit is past 200. A lot of you are in AMD and NVIDIA. Let's see. It's time for another poll. Let's are you in? Which are you in? NVIDIA, AMD, both or none? Both, neither. All right, please vote.
How's ServiceNow doing? If it's green, that's got to be a really good sign, man. Because ServiceNow is like categorized into the SaaS trade, and so if they're up,
basically flat,
that means that they're I like that. As long as they're somewhat green, I'm okay.
Yeah, no, they're basically flat, but they're green. Yes.
Yeah, I think this is like longer term. That's like the confirmation that I needed. That I do think that there is probably more and more money rotating into the SaaS trade. It might not be very obvious right now because I think it's still early, but I do think that every time I've seen like the semis running up, I've seen SaaS take a hit. And lately I've been seeing, semis will come back up a little bit, but the SaaS names will at least be flat, if not, just a little bit lower, which is a good sign that I think that we could be kind of bottoming on SaaS. So I'd love to like if you could do a poll. Do you think SaaS is going to make a comeback in 2027?
Yeah, that'll be the next one. We got 381 votes on this. Let's give it 30 seconds, and then we will close this one out. We'll do a SaaS poll. But right now, only 20% is on neither. A lot of people are in at least one of these companies. $444 votes. We're going to close it out. And the results are NVIDIA 36%, both 28%. Neither 21, AMD 15%. Okay, the next poll is SaaS going to make a comeback second half of the year?
Among the SaaS names, which ones get you the most interested?
Everybody knows. It's Salesforce, ServiceNow, and Workday.
For me, it's ServiceNow, Salesforce, Adobe, even though Adobe is probably going to have a higher stretch, a higher like climb. But I think Adobe's going to be okay. And I do think that SAP is actually pretty undervalued too. I was actually having this conversation with
look at that growth in operating cash flow from
Yeah.
ServiceNow. Like, that's not something you fade.
Yeah.
That's just not something you fade. And if we throw Salesforce in there,
Yep.
we're gonna fade Salesforce that's never seen declining cash from operations. What are we
Yep.
doing? Workday, Adobe's incredible also,
Yeah.
and then SAP.
Yep.
Then we got are there any other ones that should be on this chart?
Technically, Oracle should be there, but Oracle's got like the AI capex.
Yeah, they're transitioning to infrastructure though.
Yeah. So that's the other thing.
We're just
That
looking
last
for pure
one-
play SaaS.
Constellation Software is a good one. It's just I can't buy options on it, so I'm sticking out of it.
I mean, you look at this, these 5 companies are pure play SaaS. And year over year, 24 to 25, they went from 29.9 billion of operating cash flow to 39.7 billion. 32.6% year over year growth in operating cash flow. It's so hard for me to understand why we're fading this trade.
Yeah.
There's nothing in the underlying number. And I can put this on quarterly also, and we can chart out quarterly.
You need TTM. TTM will be a better reflection.
Because of when everything, that's why I just did on the annual, because of when everything is realized.
Yeah.
This trade is far from over, in my opinion. And the reason why I think Salesforce is still the one, and once again, that's just my opinion. You look at their cash from operations and free cash flow.
Yeah. Yeah.
How are we
Viva's
fading
good too.
this?
Someone keeps saying Viva. Yeah, Viva's good too. That's one of the picks that I have.
Viva's good.
Yeah.
But how do you fade this?
You don't. You take advantage of it. You take advantage of the valuations coming down significantly because of AI disruption narratives. And then you kind of see, like, you test that narrative out. Like, is it real or is it just people saying shit? And a lot of times it's just people saying shit, right? Like, a good example of this is, I'm telling you, like, if you look at my post on X, literally we have these waves of stupidity that come around. Like, cruise lines in 2021 were dead, and then they all kind of came back with Royal Caribbean doing a 10x. Then you had regional bank crisis. Remember in 2022 or was it 2023? Everyone was saying regional banks are dead. All the banks recovered and then some, right? We saw this same shit happen with, like, it just, I feel like whenever these industry-wide sell-offs happen, there's this multiple re-rating that tends to be way, way more pronounced, and you just have to hold through that volatility, and you really do well on the upside. Like, look at all the health insurance names, by the way. Can you pull up the health insurance names? United Healthcare, CNC, Molina, Elevance.
On what
Oscar,
metric?
And Oscar, just the stock price.
Stock prices.
Yeah.
Yeah, let's go to Seeking Alpha for that.
I mean, to see Elevance, like, you got to see this crazy move higher by all of the healthcare names, man.
Yeah, I mean, UNH is running.
Look at CNC. Centene. Mass 98% run up.
Huge.
Sarah London, basically, she was like, what is going on here? Same thing with another Elevance, ELV.
What is it?
ELV. Look at that.
Yeah, pretty wild.
You know, it just goes to show that, like, whenever these sell-offs happen, it's just, you just have to sit there and let the markets, you know, pretend like the narrative is Oscar too. Look at Oscar. Oscar is probably a monster if you bought that, you know, when this thing dipped. 86% higher in a year.
Yeah, Oscar's done well.
Yeah.
Oscar has done well. Healthcare's done well. There's no question about it.
Yeah. So I think SaaS is probably going to be the next catch-up trade in the next probably 12 to 18 months. So, if people do want to, like be a little bit more value centric, I think SaaS is where you kind of want to look.
Man, Apple wants to make all-time highs. 317.40 is all-time high, and we're at 312.20. Is this deal with Broadcom extending for 5 years? Are people now going to say that Apple is going to become an AI company?
I think Apple owns the device market, and I think the data that I've been seeing is that people are saying within the next 2 years you're going to get like Mythos level intelligence, and it's going to be on like a phone, right? So if that, and I think that's a very real possibility. That means that that'll launch probably one of the biggest upgrade cycles to ever see with phones, right? Like this is like when we went from 4G to 5G. So if Apple Intelligence actually becomes a real thing, and you actually have like phones that have AI capabilities in them, that could be a really big boost for Apple. And Apple's not spending, next to anything that what is that thing?
No, the CapEx is nothing compared to everybody else.
Yeah. The other thing is, and this is something what like I was joking with some of my friends. Once Apple raises the prices, then consumers get used to the new price. Even if memory prices drop in the future, you think Apple's like, yeah, let me go back to selling things at a discount? Like, no, they'll just absorb that margin, turn that shit into cash flow, and there you go. It's just another major cost increase and profitability boost that they're going to get.
I mean, look at the difference between Apple and Microsoft on CapEx. And then if I add Google in there,
yeah.
I mean, Apple spends basically nothing on CapEx compared to these companies.
Yeah. Yeah. Has there ever been a time where Apple decreased prices?
Maybe on the laptops. I feel like the laptops at some point got a little cheaper.
Yeah.
But not frequently.
Yeah, I don't think I've ever seen Apple ever lower the price on their phones unless it was like 5-generation old phone and they're just trying to like get rid of whatever excess inventory they have. Even like the refurbished iPhones still carry like a significant like value. It's pretty insane.
Yeah, the big thing about Apple is I think that what they do is they introduce newer versions. Like they just did the Mac Neo for the entry-level laptop. Instead of decreasing the price on their high-end stuff, they'll implement a new product to service a price point that they want to capture. Yep. Yeah. Cool as a cucumber. Yeah. Lighter components for a cheaper model. Yep. Yeah,
the only student discount on a Black Friday, they do free gift cards. Yeah. Well, like I said, they'll absorb all that margin, even if memory prices come down. So,
I mean, I've been an Apple shareholder for a very long time. I've always liked Apple. I've just said that I'm not sure if they are making the right decision staying out of the CapEx boom for one simple reason. And that simple reason is this. And I can finally show it without having to build a spreadsheet for it. If you look at Apple's cash from operations, that's the only metric we're going to look at. It has expanded by 68% over the past 9 years at a 6% CAGR. You add in Microsoft's has expanded 308%.
I think you just disproved your own chart, brother.
No, because Apple went from 66 billion to 111 billion. Microsoft went from 33 to 136. Yeah. That is a huge increase over a 9-year period. Huge increase.
I think the key to look at when it comes to this chart, you should probably look at it on a per share basis, because Apple's just got that massive buyback program, which boosts their total return with share price, with both dividends now and with
yeah, but that would be if I was looking at earnings. I mean, just looking at the operating cash flow is just what the company produces. And Apple's a great company and they have increased operating cash flow, but because what I'm saying is we'll never know if Apple could have increased it more by deploying more to CapEx instead of buybacks. We'll never know. We see with Microsoft what's happened. And if we look at Alphabet also, which is another good one to compare because of the Android system, Alphabet has increased their cash from operations by 357% and 18.4% CAGR. Like, that's no joke. They went from 36 billion to 165 billion.
Yeah, but I think that what your chart is showing right now is actually very interesting because it kind of shows that Apple's top line has been flat, but their bottom line has been expanding, right? Because
let's show that. That's a good one, Chris.
Yeah.
So if we look at revenue for Apple, their revenue over the past several years was flat. It actually declined in 2023 year over year from 2022, and it just went up now. And then if we throw in Google and we throw in Microsoft, I mean, their revenue has been absolutely incredible over the past 9 years. Apple's increased revenue by 93%, whereas Alphabet 346% and Microsoft 209%.
Yeah.
I mean, truly incredible growth.
I think Apple is just getting a lot more premium in terms of, like, the reason why their share price is at all-time highs is because Apple is getting a premium to malinvestment that plagues Google and Microsoft, because of the uncertainty. Like, there's still question marks around, will Microsoft and Google be able to monetize all of that CapEx that they're doing right now? Whereas Apple is like, listen, we're monetizing. We don't care. We're not spending money on all of this stuff. So the premium that Apple, like, just do a valuation, do forward enterprise value to EBITDA. Actually, you know what? I used to think forward EV to EBITDA would actually be good for the hyperscalers, but it's not anymore. I think we need to start transitioning to EBIT. And the reason why we need to transition to EBIT is because now
you don't want depreciation amortization in there?
No, that's the thing. I want depreciation amortization to be included in there. That's why we should do EBIT now instead of EBITDA. EBITDA is better for like software where they don't have a lot of depreciation. But now with all the hyperscalers spending so much money, the valuation should kind of transition to that depreciation being included in there also.
Well, luckily for you, I have that built. So I have EBIT as a line item in here.
Yeah. That's
EBIT.
Yep.
So that's Apple's.
Yep. Microsoft.
I mean, these are crazy numbers.
Yeah.
And Google, I mean,
yeah.
I don't know. I'm not worried about Google.
Can you show it? Can you show it like multiples, like the chart for like what their multiple is?
No, but I will add that into this so we can see multiple compared to market cap and a price too. I will add that in today.
Yeah, that enterprise value would be amazing because now they're all taking on debt too. So, yeah.
Yeah. I just think that it's going to be very exciting to watch these companies. And here's my biggest thing. Who can compete? Like, who can compete with these companies?
Well, that's the thing. Like, one of the things that we're seeing with like Nebius and CoreWeave and all of these guys is there is a lot more competition for AI compute than ever before. Like, I was looking at pricing for H100 rentals, and the price difference between H100 rentals for the different hyperscalers is actually pretty insane compared to what the neoclouds are pricing their H100s at. Let me just show 1 second. 100. Check this out. Look at this. So right now, this one company, Run Crate, can do $1.50 an hour for a H100 rental. AWS is charging almost $4. Azure is charging almost $4 too. GCP is like $3.67. Oracle is at $2.40. Lambda, which is another big one, is like $2.49. So this premium is just crazy. So I do think that these neo clouds could theoretically, get scaled up and eventually get to a level where they're charging, a discounted price, and they could actually take some market share away from these guys. But I do think that at some point, if the rental prices become sort of too cheap, and these companies sort of go out of business, then the hyperscalers are probably just going to buy them out. Yeah. This feels very similar to what is it called? Like the shale revolution, when shale revolution came out, where you kind of had like the super majors, and the super majors, they had insulated balance sheets. So they could basically, be profitable when everyone else couldn't be profitable. And then these guys just came in and scooped up all the prime assets. So if there is a quote unquote a bubble, and like the neo clouds, like, like Burry and these guys are saying, if they get sold off, that could be an opportunity for like a value play, and where you could actually pick some of these up, and then these other guys kind of fold them up and take them up. I mean, you were around for KMI. What happened to them during 2016? So you know exactly what I'm talking about. Like Kinder Morgan went like, just look at
the 2015 year killed the oil trade, it killed the gas trade, it killed MLP, it killed everything.
Yeah. So if there is sort of a Michael Burry was right situation, I don't think that, you're probably going to see some like consolidation in the hyperscalers, like where they do go down 10, 20, maybe even 30%. But at the same time, the neo clouds will end up becoming super discounts, and you could just get a whole bunch of consolidation at that point. So, but like I said, that's under a Michael Burry scenario. I'm not saying it's going to happen. Just there's possibilities of everything happening.
Yeah, we'll have to see. I mean, the shale revolution got stopped in its tracks for a lot of reasons. So,
I mean, do you see any like parallels to that?
Right now, no, not really.
Yeah.
I mean,
sorry, go ahead.
When at that time, there was such a crazy thing for fracking, and people were legitimately fracking, looking for oil, and they came upon natural gas with no oil, and they just, there was a huge energy re-rating. I don't know. I think we're well past that right now. I think these companies are just so much better at what they do, and the technology has advanced so much that I don't think that that's going to happen.
Yeah, I mean, for anyone that doesn't know, basically in the year 2000, and this is going to surprise people because I think a lot of people don't remember this, but the price per barrel of oil was like $20 in 1999. Okay. Just let me repeat that. In 1999, the price of a barrel of oil was $20. By 2008, that same barrel was like $120, a 6x increase. And then you had all of these fracking companies that came in and they developed fracking, hydraulic fracturing, and basically extracting oil. And there was just this massive, massive boom from like 2010 to like 2015. And then it kind of burst. But basically, everywhere you look, people were fracking, and oil was just like they were making money everywhere. And then one day, I think people just kind of woke up, and there was just, I think it was actually the Middle East that came out with a lot of oil, and they flooded the market, and then prices went from like 120 to like 60 within like a few months. And then all of these fracking companies, they all went out of business because they had taken on a lot of debt in order to finance the boom. And you know what happened? All the super majors came in and just bought up all the prime acreage, and then they just started doing the shit themselves. And at the time, I remember GE buying Baker Hughes. Like that was like market top pretty much.
And since they spun it out.
Yeah. Baker Hughes, Halliburton, What's the other one? Schlumberger.
Schlumberger. I mean, I was big on Schlumberger last year.
Yeah, those companies just absolutely got murdered during that shale downward move. So, like I said, if there's any parallel to that where computing becomes too cheap and like, people can't service their debt or can't finance their debt, then you've got a major problem. But like I said, I personally don't see it at this point. And if there is any sort of an issue, then we'll just have to keep our eye on it.
Speaking of debt, did you see the thing I built for you with consumer credit stress and consumer stress index?
Yeah, that macro table's great. I love it.
Yeah, I put a lot of other things in. The money supply was interesting too. Man, we were on such a good trend.
Someone mentioned something good, like junk food pimp, whatever. He said KMI dropped in 2015 because KMP converted from an MLP to a C corp. That is absolutely true. But then they also lost a ton of money on their carbon enhanced carbon business as well. So it wasn't just a C corp conversion; it was more than that.
Wow, Reddit 206. How many people followed me in? I'm no longer a Reddit shareholder. How many people got into Reddit? Show me in the chat if you got into Reddit when we were talking about it. What a great move this has been. This has gone from about 135 to 205. Went to 135 to like 180, back down. Man, Reddit's been on fire. Absolutely fire.
Yeah. It's funny. Anytime I type in anything on Claude and do some research or whatever, it does pull up a lot of things from Reddit. Have you noticed that as well or no?
No, I actually have not noticed that, but I also don't pay attention to that. There's a lot of rumors that Reddit is going to be licensing data for models to train on. But my problem with that is, and I don't use Reddit. I'm not a Reddit user, but I think a lot of Reddit is opinion-based, right?
I mean, there's Reddit communities that are very niche that you wouldn't necessarily like be aware of unless here's an example. There's a Reddit thread on Dutton Ranch, right? Like I was watching Dutton Ranch and there was like an episode that I really liked and I just kind of wanted to just chime in about it, blah, blah, blah. There's a Reddit community around it and I was able to talk to people about it and it was good. Fun times, There's a Palantir community on there. You could even have something like very niche and there's a community around it and people talk about things and, some people ask about advice on there and they want to get feedback from other users. Like an example is like me and my wife were going on a cruise in about a month. And I was just, we were just looking at the Reddit forums to see if anyone had some helpful tips on different things. And, if there's been any changes on recently and how to navigate them. Like my wife is part of a student loan group where they've been talking about student loan forgiveness programs and, people getting those loans approved for forgiveness. And so there's, like I said, there's communities on so many topics and they're all on Reddit. So
we have news from Jason. Supposedly hackers leaked Apple iPhone 18 Pro parts list, US models, full Qualcomm modem stack, Apple's in-house C2 international only. 7 years and $1 billion after buying Intel's modem unit, Apple still can't do Wave. Qualcomm previously guided this business to zero. That's about to change. This was part of Qualcomm's company that was left for dead. If this is true, that could be why Qualcomm is moving right now. Qualcomm is up 5%. That could be why.
I thought the leak came out this weekend.
This is the first time I'm seeing it, but I did not see it.
Yeah, the leak came out this weekend. I don't know if it was directly this because it didn't just open at it ran up right away. So I saw that leak come in on on this weekend.
Yeah, I don't know. This is we've gone over Qualcomm. I do believe there's a big opportunity. The numbers support it, the fundamentals are there. It just matters if the market is wrong on the forward outlook, which I think it is. We'll see. But these companies are catching a bit. I mean, Apple's working its way up to all-time highs. Look at that. It's about to hit 313. Everybody, not everybody, I should gotta stop saying that, but so many people leave Apple for dead, yet they continue to showcase why they're just a great company.
I mean, Apple is just printing money, right? So there's no point in selling Apple. And then, like I said, if this new foldable phone thing comes out, that could be a next upgrade cycle.
Oh, I'm getting one.
You're getting a flip phone?
Yeah, if it's as good as Google's.
Mhm.
Look, when we were in Chicago, Dougie and I went to breakfast, and I gotta tell you, Dougie probably remembers the name. Is I think him and Hollis went there the next day with Arthur.
Mhm.
One of the best places I've ever been to for breakfast. It was incredible, and I was playing with his phone. It is so good, Chris. I mean, having the flip so you can either use it as a regular phone, normal, or open it up and have double the screen makes such a difference for certain things.
Are you sure it's or is it just a novelty?
No, I mean, I played with it for a good 10 minutes, and I could see myself using it for reading, for looking at data, and for watching videos without a question.
Yeah, I mean, I I like the form factor that that we have, and the only thing is like the screens break. I hate that. Meta.
The market hates Meta right now.
I don't think it hates Meta. I think they're just a little bit questioning their moves as of late because their strategy hasn't necessarily been very succinct. Like one day they're like, oh, we're gonna do this, another day we're gonna do that, and then we're gonna spend this much money, and then we're gonna do this. And this over this weekend, they're Alexander Wang, the guy that they took on from Scale AI. He basically said he was kind of teasing about Muse Spark, like the next version. It's gonna have like frontier levels of intelligence. So that was another thing that came out. So I think Meta is in this like show me stage at this point where their business is still doing really well. It's just the market doesn't trust all of their capex. But if they keep performing, and especially earnings, if they show that their cash flows are pretty durable and that all their investments in AI are actually paying off, then Meta has a nice rally ahead of it.
And then there was Amazon, who underperforms the S&P.
Well, that's because Amazon's just got a whole bunch of capex, and markets always give Amazon this uncertainty premium on their capex because they just say like, okay, when is that money coming in? When is it coming in? So the one that shocks me is just Microsoft being so low.
Oracle rolled over big time. Yeah, big old Mr. Softy is not doing much over a 5-year period, and over the past year, it's rolled over.
Yeah, but once again, Microsoft, I think, is getting a little bit of a hit because they're technically software business also. So I think they're part of a lot of indexes that are like SaaS indexes, and there might be some indiscriminate selling because of that. So if SaaS recovers, Microsoft will recover. So they have correlation to the SaaS names. But in terms of like business durability, I don't see Microsoft going anywhere.
Yeah, I think that these are the companies that lead us in the second half. I don't think that things are going to stay the way that they are. I think that chips and memory will still do okay. Oh boy, I need to shut up. We need to go to this. I want to hear what they're saying. Give me a moment, everybody. This is big news for me and my theory. Here we go.
The reality is that stocks are still very, very low and they need to be replenished. But the right here, right now, is oversupplied because China just isn't back, right? Chinese imports came on.
OPEC Plus agrees to boost oil output. Let's go. Oil is going to roll over even harder, ladies and gentlemen. Almost 200,000 additional barrels per day starting August.
Off by on average 4 million barrels per day. The June number is shockingly low at 6 million barrels per day, the cut that China's done. They are drawing down inventories rapidly, but that has meant that as the Hormuz flows have reopened, and we've just put out a piece really detailing how much of this was stranded already, how much of it is new production. New production's only about 2 to 3 million barrels per day, but there was so much oil already stuck. So imagine all of that coming out and China isn't buying. Of course, you're going to have oversupply.
Right. Is the China buying strike why there's so much Iranian crude is reportedly still on the water?
Yeah, absolutely. Because, this is the interesting thing that firstly, none of our balances had all of that Iranian crude coming out in the market, like pre-crisis or pre-war, I should say. Now, of course, the U.S. has basically given Iran carte blanche to export, given the waivers. And yet we continue to see banking being a real bottleneck because outside of China, nobody is really able to pick up as much Iranian volumes as Iran would like them to. And I think what's very, very interesting in this is that European sanctions remain in place. And this is something a lot of refiners, when we are speaking to them, continue to highlight to us. And that's exactly why. So it's not that China's not buying one type of crude and buying another type. There's just generally imports have come off by about that 4 million barrels per day or so.
Do we know why such a sharp change in demand over in China? Is it a reflection on just economic output? Is it a reflection on, oil prices were high and so the Chinese have kind of adapted and figured out new ways of doing things?
Honestly, this, for me, at least personally, the biggest thing I'm trying to figure out, and we've got a great China team. We've been kind of discussing and publishing on this for a while. And look, there are lots of different things without going into too much details. Remember, China was buying about 1 million barrels per day or so for filling its own SPR. That stopped. So that's 1 million barrels per day of quote unquote demand gone from the market. They are a product exporter. They stopped exporting products because they wanted to just, become insular and kind of look after themselves. That's 1 million barrels per day of crude that they would usually run to export that product. Which is why, by the way, I know we're talking about low crude prices. Have you guys seen where gasoline cracks and diesel cracks are? They're like $40, $50, right? I think that's the interesting thing, that this is one of the impacts of China not exporting. I know we like to talk about crude, but what you and I pay for is actually the petrol or the gasoline and the diesel. So I think we should kind of think about that, like the impact China's having there. And then, we know.
All right. So this is important because at a time when the Strait is opening back up and you have 20% of the global supply coming back on, and that'll take a couple of months to feed in, OPEC Plus next month is going to increase production by 188,000 barrels per day. That's going to do several things. One, it will help the CPI and PPI print cool a little bit over the next several months. It'll probably take 3 to 4 months for that to roll in, but that's going to increase the transportation of energy. And I think it's going to help keep prices in that band that we needed to be in. I got to say it. I think we're going to see a different message out of the Fed in the fall than we are seeing right now. I really do.
Let me just address something really quickly. Someone in the chat, they put gas stations are literally price gouging cash on July 4th driving demand. That's not 100% true. The thing is, everything works on like the crack spread, as she was trying to mention. Like, just because oil went down to $68 doesn't mean like the refiners who buy oil ahead of time, if they've bought it for close to like, let's say 80, 90, $100 a barrel, what happens is as they refine that, they take that and they sell it wholesale. And the gas stations, they add usually about a 6% margin on top of it, and then they sell that. So the margin for the gas stations for the fuel itself is only about 6%. It's not like a crazy high margin. And once again, you have to run down the fuel that you bought literally like a month ago, and the new purchase that you get, that is where you're basically making money again. So imagine, you own a gas station, you got a load for, like $4 a gallon, and you sell it for $4.24. You're basically making 24 cents on the thing. But at the same time, if let's say the price comes down, it's not up to you to just lower the prices right away. The what are they called? The refiners, who are the wholesalers, they're the ones that basically set the price for you to buy. So as they start lowering their prices, the gas stations start lowering their prices. And then once again, it's just basically a supply and demand thing that happens. So, just wanted to clarify that. It's not as simple as, oh, look, oil prices down to 68. That means the gas prices at the pump should be like $2 all of a sudden. Like, no, it takes its time. It's a process. It works its way lower, and hopefully it lowers. We should see probably $2, $2.50 at least gas in probably the next 6 months, if the prices stay where they are today.
Yeah, I could see that happening. I could see that. All right, ladies and gentlemen, let's do a look at everything, and then we're going to call it for the morning. Iran is the big leader on the watch list, up 12.5%. AMD, 566. I think that they are going to capitalize potentially. At least that's what the market probably thinks on NVIDIA's announcements. I shouldn't say announcements. Semi-analysis is projections. Rubrik, 6%. CrowdStrike up 6%, Qualcomm 5.5%, Reddit 205, getting its groove back, CoreWeave 85.81, Zeta 4.66%, it's up 21.67. I am very serious that Zeta is the dark horse in my portfolio that I think has the most upside potential over the next year. Big announcement today. Later, we expect. They're presenting at a big conference. I am hoping we can stream it. I don't know if we can.
Stay on for like 2 minutes. The chat is asking very interesting question, and that is why you built your macro thing. So bring your macro thing up and bring up gas prices.
All right, hold on.
Just show everyone what gas prices are around the country. And some people are like, oh, in Washington, they're like $4 all the time. Well, look at what the gas prices are. Okay, there you go. And just, can you layer on WTI prices and then average gas prices?
I don't think I can layer them, but I can go to crude and other things. This is gasoline.
Yep. Can you show the map, the one where everyone, like what everyone is paying?
Yeah.
There. I just blow that up. So you can see here, some parts of the country, they're always at $4, $5. But that's not because, what is that thing called? That's not because of anything like at the gas pump level. That's all the taxes that they get layered on. So when you look at California and Washington, don't blame the gas companies. Don't blame the refineries. Blame your local politicians.
Yeah, it's state and local taxes.
Yeah. So, if you go to Texas, it's like $3.30 right now. So,
yeah, and like California's 35 cents per kilowatt of electricity and $5.38 a gallon. And then you look at a state like Texas, 17 cents a kilowatt hour for electricity, $3.32 per gallon.
Yeah.
I mean, Florida, 15 cents a kilowatt hour, $3.77 a gallon.
Yep.
And this is all coming from AAA, daily gas. Like, this is all real data.
Yep. I love this. This was a really good build, by the way. So for me, I look at a lot of macro stuff. This is something that I'm probably going to use very regularly. So I told Steven to charge for this because that's how good it is.
Today, no, but in the future, what this is going to become. So yes, this is my site. You can go to it, nowflation.com. I already filed for trademark. So yes, I'm taking it very seriously. So I own the site. I filed for trademark. I built this over the past couple of days. You can use it for free now. It's every piece of economic data that I look at personally rolled into one site, so I don't have to flip around to everything else. So you can hover over markets, economy, inflation, and there's a lot of different things. If you want to know what the nowflation difference is, so I have my nowflation gauge of where we believe inflation actually is versus CPI. You can click on that, and I read it out in the beginning of the show. It'll show you why the numbers are different.
Can you blow it up, make it bigger so everyone can see? Yeah.
Yeah. So this is why the numbers are different. And then if you look at the timing gap, there's a huge timing gap on old leases up to 12 months. BLS publishes CPI data from last month, 4 to 8 weeks later. And then where I'm getting all the data from: government data, BLS, BEA, EIA, the USDA, Treasury, Fred.
By the way, everyone, Steven is doing this on his own dime. Like all this API access that he has, he's paying for himself by himself. So just let you know, this is not like Steven trying to monetize everyone, but it's there's just a lot of stuff that he's incorporated that's really good. So
yeah, I mean, listen, this is something I built not just for me, but for the community. I don't know what it's going to turn into. This is all the data. Like when you look at the data, this is not like me just going in there making up prices. Everything is pulling automatically from all these different places. So eventually this will turn into something with stocks.
Show them the hamburger thing where you actually went to the economy or the markets and you can actually see prices of different commodities and how they're trending over time.
Yeah, so I got rid of the hamburger thing. I put everything up top to make it more pleasing aesthetically.
Yeah.
So what do you want? You want like the grocery stuff?
Yeah, you could do groceries. You could do rent.
So eggs right here. You get per dozen, year over year, all the maps.
Yep.
And you name it, we put it in.
Rent and shelter, I think that's important for a lot of people. So you can see like what the typical cost of like rent is versus how much it would cost to buy. You know, where the most increases are in rental and which ones are actually like decelerating. So if you go, there was one that I saw that showed like rent, who had the most declines and who had the most increases. Housing Market Hub, I think that was it. Yeah, there you go. And then you could just scroll down and see like what the cost of capital. Like I said, it's a lot of nifty features.
There's a ton of stuff.
Yeah.
Ton of stuff. And then you can look at countries, you can look at calendar, and I put a mortgage tracker in so you can track mortgages and what's going on, what the payment on a typical home is.
What the cost would be. That was a really good ad, which is like if interest rates are at 8 versus 5, what your monthly would be on an average home.
So if you want to use it, you're more than welcome to. It's nowflation.com. So
there you go. Now you're going to crash the site. Congratulations.
That's fine. I had to pay for more bandwidth. That's all.
Put it in the chat. What is it? Nowflation.com.
Yeah, I think I have it pinned.
Yeah.
But I'll be putting a post out on X once it's where I want it to be. And over the next several weeks, this may morph into something much, much, much bigger. I have a lot of plans. Yeah. So you guys want an app of this? You may be able to get an app of this. That may be on my
on the Apple Maps.
Yeah, we may by the way, Chris, before we close out, I got to tell you something. So when I filed for the trademarks, I then started looking last night because we were talking about this on the members only. You know, somebody trademarked the word token maxing.
I wouldn't be surprised, man.
Crazy.
Yeah. But now everyone is token minimizing. So
yeah.
You know, everyone's woken up like, hey, wait a second, we can't afford all these tokens. Let's all kind of like sit back and try to make things a little bit more efficient. So, yep.
Token maxing. All right, ladies and gentlemen, thank you for hanging out with us. Thank you for Krista coming on. Please go follow Chris on X. I'm going to link his X account. And Chris and I will be back at 9 o'clock tonight. We have an interesting topic we're going to be going over. Please subscribe to Chris's X account. It is right here. And if you can do me a favor and like and subscribe to the channel, that would be great. And also go follow Cactus Jack on WhatsApp for breaking news. Cactus Jack is very quick at getting everything into the community. So thank you, everybody. Really appreciate it. I will see everybody at 3:45 for the market close. And then Amit will be back tomorrow. Hopefully he doesn't sleep in. I have no idea what his what it's going to be like, but I'm sure he's ready to get back to work after a 2-week vacation. So thank you, everybody. Really appreciate it. And I will see everyone at 3:45. Thank you very much.
Take care, guys.